All right, folks, thank you for being here. We are live. It is New Year's Day, and it is time to get this new year kicked off. We've got 6 hours of training going on today. If someone would drop me a comment in the chat, let me know how the sound sounds because suddenly I can't hear anything through my computer. So that's because I'm no longer listening to my speaker bar. So someone drop me a comment in the chat, please, and let me know if the sound sounds good, and then we will get started. Let me find the list of things that's happening today and let you know. So here we go. Here we go. So today, see if I can do this successfully. We are right here. We're on our starting seminar here at 9 o'clock. We're going to do how to trade options, and then as we go throughout the morning, it's going to be how to trade option stocks and forex, and then we've got 2 sessions at lunchtime that go hand in hand. How to fund your trading account, and then lastly, at the end of the day, how to create your trade plan. And that's going to be the one that's going to be the most, I would say, the most beneficial for anyone who is struggling, because it's really taking a step back and saying, what can I? It's not working. How can I make this thing work a little bit better? Give me 1 second. Let me make sure it's actually working. Try my best to the right output device of what I can hear, and it's not even there somehow or another. My speaker has just decided in the last 30 seconds to disconnect itself from my computer. So, someone leave me a comment and let me know if I am, in fact, you know what? Hang on 1 second. Let me go on my phone. I'll just keep it for 1 second. You can't even see what I'm doing because I am still have a thing in front of my face. Let me check on my phone to see if I am live. Give me 1 second. Sorry about this. I'm just gonna make sure if my speaker went dead, then I'm hoping my microphone didn't just go dead. Um, so let me get this out of my face's way, and we're gonna start off today with how to trade options. We had a question in the Facebook group from one of our members, Trader Ari, and he asked about options. I did kind of a quick run through one Sunday evening, which is when we have our group set meetings. By the way, today, all of these live training sessions are absolutely free for everyone. But they are today module 1 of individual courses on how to trade options, how to trade stocks. I'm not gonna be able to teach you everything you need to know about how to trade options in 1 hour. And my phone refuses to pull up YouTube. I have no idea if my sound is on or not. So if you are here, please, even if you're not normally a commenter, would you please comment? Let me know if my sound is on, because I'm starting to freak out that my audio, half of it went out 30 seconds ago, and I'm starting to freak out that the other half may have done that. So someone please let me know in the comments if I am if you can hear me or not, and if you can see me or not. Those would both be good things to see and hear. Yeah, my phone just refuses to pull up YouTube for some reason. So today is all about options, and I'm trying my best to think and speak to this worry about whether the sound is working out. Why, oh why, does it wait until I go live to, hang on, I can do this. There we go. Fantastic. All right. I am actually, you can hear me, which is fantastic. So without further ado, we've had plenty of ado. Let's dive right in on how to trade options. And as I mentioned, these classes today are basically lesson 1 of longer courses. I'm going to deliver every lesson live to everyone in the world for free, but the replays are going into the coursework, which is inside the members area. And we're going to start with whichever one, the Facebook group. By the way, if you're not a member of the Facebook group, please join. It's absolutely free. Where's the link for that? I know I said without any further ado, and here I am just a-doing. If you want to join the Facebook group, it's right here. It's absolutely free. I'm going to post a poll in there. Which course do you want me to start with first? I can't start with all 3 of them first. So today is going to be session 1 of how to trade options. And fantastic, look at there, it is working. So the question that came up is, why do I trade options? How do I trade options? Do I even need to trade options? Before we get started, I've got to do a disclaimer thing. I apologize for that, but I mean, today Normally, when we do our sessions, it's like, okay, here's a disclaimer. These are for educational purposes only. That don't take any trades off of this. Today is just pure education. I'm not going to be showing you any particular trade setups. So there's our standard disclaimer. So first thing first, why even bother using options? Well, that's a good question. Options had this mystique out there in the world that they are difficult and they are only for the special and the advanced traders. But to be honest, options are one of the most amazing opportunities for anyone to use. And there's two types of people that do use options. You've got your investors and your traders, your speculators. And your investors are out there, they're trying to use options to lessen their risk, right? They've got a long-term position on. Maybe they bought Apple in 1990 and it's quadrupled in or whatever, it's gone up 50x. And they want to buy some insurance on that. Well, the other ones are the speculators, the traders who are just wanting to buy and sell options like they're buying and selling stocks and futures and all those things. So there's two different mindsets and two different approaches to options. And speaking of two, there are only two types of options. That is the thing that was the most surprising to me when I first learned about options. Was we hear people talk about options. They're talking about Delta, and they're talking about iron condors and all of these complex things. And it makes you think when you first experience options. By the way, if at any point I fuzz out, just let me know in the comments. Hey, can you repeat that? The internet connection here can be problematic. But when it was boiled down for me, hey, there's only two types of options. Ignore all the noise and just focus on there's a call and there's a put. And you can understand what they do by the name. You call things, think like calling your dog, right? Calling your kids. Sometimes neither one of those listens to you. But a call option says you're calling something to you. And a put option is you're putting something away, putting something on someone else. So call to me, put to you is the way you should think about it, right? I'm going to call something to me and I'll put something to you. Those are the only two types of options that there are. And where's the button that I was using to advance? I guess I'll just do that. Sorry about that. So a call option gives you, and this is important, and you'll hear me reference this over and over and over again, but this first 4 words is very important. It is the right. If you have a call option, if you buy a call, you're buying to call something to you. You have the right, but not the obligation. You don't have to buy a specific stock at a specific price on a specific date or before the specific date. And a put option is the exact same way. You're going to put something. If you buy a put option, if you own that right, you have the right, but you don't have to, not the obligation, to sell a specific stock at a specific price on or before a specific date. And you think, okay, well, what does this mean in the real world? This is the S&P at COVID. And you can see right here, no, I can't. Hang on. I hate to do this because it's going to mess things up. But can you see? Yeah. So here's COVID. This is right when the COVID first hit. And there's the S&P 500 after COVID hit. So imagine, and let's say you owned S&P, or let's say this is anything, right? Let's say this is Apple, because most of the stock charts looked like this during COVID. And you've owned Apple for 30 years, and it just tanked. What if you could go back in time and sell it before it tanked? What if you could say, okay, I have seen over the course of the last 3 months, the world shut down, everything's gone crazy, and I've lost 50% of the value of my Apple stock. Boy, I wish I could go back in time and tell myself to sell it way back when. If you owned an option at that price, you would have the right, but not the obligation, to sell it back there. So if you had bought a call option, if you bought a put option, you bought a put option at whatever that price was, and then you see, hey, the thing tanked. And let's say it's on Apple. You've had this Apple stock for 30 years. I'm going to protect myself. And so what is the difference? What is the importance of that phrase, the right but not the obligation? You don't want to be forced to sell if you don't want it. So let's say that the price of Apple and the price of Acme, the price of everything fell off a cliff at COVID, and you had bought a put option up there at 1,000, up there at whatever the price was, and then COVID happens and the world falls off a cliff, and suddenly, hey, I can go back in time and I can sell, I can exercise this option. But you know what? I'm confident that Apple can recover. I'm confident that Acme can recover. They're still going to be paying their dividends. Yeah, I'm torn. I don't really want to. I may not want to sell. I may not want to exercise an option. That is where the right but not the obligation comes into it. That is the beauty of an option. Is you've got choice. You've got options, right? You can say, okay, fantastic. I was in this just for a trading play. I don't really have a dog in the hunt. I don't care about Acme or Apple that much. So I'm going to exercise that option, and I'm going to go back in time and I'm going to sell it way up there. Or you can say, I'm going to keep it, and then you just let it expire. So a put option gives you that right, but not the obligation to sell way back in time. So that's what that is, right? I own stock. Here's a bring it down to earth an example. My mother-in-law, my father-in-law rather, worked for a company for 30 years, and over the course of time, as an employee, he accumulated stock in that company. He passed away, and now my mother-in-law has all that stock. Well, this is part of her retirement portfolio. She'll eventually start selling these things off. And let's say it's Acme, and it's at 100 right now. And she starts hearing rumblings about the avian flu. She says, oh no, it's going to be COVID all over again. Well, my retirement is dependent on this in 5 years. I don't want to lose over the course of the next year or two 50% of the value of this stock. So I'm going to buy a put option at 100. Just to make sure that if the worst case scenario happens, I can always get back and sell it at 100. Now, what happens if a year from now it's at 105? Nothing. It is just like buying insurance. You pay a premium to your car insurance company every month, and every month that you don't have a wreck, you just paid a premium. That money's just gone, right? But you're buying something of value. This is the prime example. We already do this in this respect. Buying options as insurance. We do this all the time. That is all that it is. It's insurance. We buy home insurance. We buy car insurance. Life insurance, any kind of insurance that there is out there to buy. It's the same thing with, let me get my face out of the way. Can I move that over there? Let me do that. This is essentially stock insurance. Investors, long-term holders, or even medium-term holders, use put options to insure their investment. And just like any other investment, it's got those things you're used to. It has a premium, a monthly thing that you're paying. It's got a little contract length. I mean, all of us, when we had car insurance, it probably runs out at the end of the year and you have to renew that policy, or your homeowner's insurance or your life insurance. At some point, you've got to renew that policy. This is the exact same concept. It just has a different name. Let me do that one. So what about the other side of it? Let's say that you're a stock trader and COVID happens and Acme falls off a cliff and say, hey, I want to go short. I'm going to ride this thing down. I'm going to go short right here. And then it bounces back. What could you do in that case? Well, in this one, you have the right, but not the obligation to buy something at that price. In other words, it's a call option. You're calling it to you. When you're buying it, you're calling it to you. So now, let's say that I am convinced that the stock market this year is going to tank, that the Fed is going to raise interest rates, that we're going to have World War III, and the stock market is going to fall off a cliff. So I'm going to short everything. Just in case it goes up, I'm going to buy a call option right now where it is, so that if it does go up 6 months from now, I have the right, but not the obligation, to buy whatever it is at that price. So, when you're shorting, you have to buy to cover. You sell it, and then you buy to cover. Well, if I sell it at 100 and it goes to 150, well, now I got to buy it back at 150. I just lost $50 a share. But if I had a call option, I could have a call option at 100, and it can go to whatever, go to 1,000, and I still get to buy stock at 100. Some poor sap out there is having to sell me his stock at 100, no matter what the price is. This is why it is so wonderful. It is insurance. It is risk management encapsulated. And again, you already understand this. And apparently I didn't finish this slide. It's the same principle as a put. It is insurance for that short position. So in this regard, you buy and sell options as an extra layer of your process of trading or investing. I'm buying a stock, I'm selling a stock. I'm really convinced that the stock is going to do this or that. I'm 95% sure that the stock's going to do the things I think it's going to do. But just in case it doesn't, let me buy some insurance. Let me hedge my position. There's other ways. There's lots of ways to do this, but buying options is the easiest one of all. It is just stock insurance. Investors use a put option to insure a stock investment going long, and they use a call option to insure a short. And again, you got investors who are going long. You don't really have a lot of investors going short. Investments. We'll tackle this issue this afternoon when we talk about how to develop a trade plan. And I would encourage everybody out there, by the way, this is going to be our most important one of the day, to come to that one, because it's not quite what you think. Developing a trade plan starts at the most basic question of, what do you want? What are you trying to achieve? Not just what do I write down, but what do you want? So this is one of the questions we're going to go over. What are we trying to achieve? Whether we long-term investment or short-term, medium-term investment. So that's for the investment side. They're in it for the insurance. They're happy to pay, like you are happy to pay, or begrudging to pay, required to pay by law, car insurance. If you have a car, every month, $100, $500, whatever it is, goes out the door. We never see any return on that money unless we have a car wreck, and then the money comes back to us. Same thing here. I have insured my Acme position for the next year, and at the end of the next year, if I don't have a stock crash, I just paid a premium, just like car insurance, and that money's gone. You factor that in. It's part of risk management. You can't have something for nothing. Well, why do traders, which is why we're here, why do they use options? Remember, traders are in this for the short term, not long term. We want income. We're not in this for capital investment gains long term. The principles are exactly the same for traders and for investors. Think about, what if you had that? Let me make this a little bit bigger. What if you had the right to go back here and sell? What would that be worth? And the worth here is what we're talking about, not the effectiveness or the usefulness of the option, but in this case, the actual option itself. Because remember, the options are sold on the market, and an open market, just like stocks are. So what is that option worth? If you had bought a put at 100, let's assume this is Acme and that line is pointing at 100. If you'd bought a put at 100 and COVID happened, it dropped to 50, and you are suddenly sitting there with the right to sell Acme at $100 a share when everybody else in the world has to sell it or buy it at 50. What's that? What is that worth? You got a golden ticket. This is not a golden ticket. This is my book, Trading with Joy. You got a golden ticket, right? Hey guys, I got the right to sell Acme at 100. Who wants it? That's what the value in it is for investors. So from the standpoint of the actual cost, value of the option itself, as the price of the stock goes down, the value of that put goes up. Think about it. Right, where's that screen at? That screen's right here. You've got it. This is 100, right? You have bought a put to sell Acme at 100, and now it's at 90. How much is that? $10 extra that nobody else has the right to sell it at 100. How much is that worth? Now it's down to 80. How much is it worth? Now it's down to 70, and you could sell it at 100. So as the price of this thing drops, the thing you're holding in your hands gets more and more valuable. Oh my goodness! You know, when I had this thing and I had the right to sell at 100, and the underlying stock price is 99. Big deal. It's $1 a share. Maybe some folks will want it. Now it's $5 a share. Now it's 10. Now it's 20. All right. As the price of this thing goes down, your ability, your right, your golden ticket to sell way up here goes up and up and up and up. And sure, maybe you think, well, when it gets all the way down here, I will exercise that right. And meaning it's a contract, the contract between two people. It says when the contract expires, we're going to make this transaction, right? At the end of the month, at the end of the year, or the end of the week, whatever it is, when the contract expires, if the terms of the contract had been fulfilled, in other words, the price has in fact gone down and it's expired, then I, Bob, have to sell to you, Pepper, my Acme stock, or I, Bob, have to buy from you, Pepper, your Acme stock, right? So you could say, okay, I'm gonna turn around, I'm gonna exercise it, I'm gonna buy this stock for 50 and turn right around and sell it in the open market for 100. Or you could just do what I said a minute ago. You can go out there on the open market and say, hey guys, I've got a golden ticket. I can sell Acme for 100. Who wants it? And then the bidding war starts and you sell your option. You don't sell the stock. So that is how traders make money on options. They buy and sell the option. As the price of the stock goes down, the value of the put goes up. The same is true the other way around. What if you had the right to buy down here? And as the price goes up, you could still buy it. So now it's at 50, right? And this is going to 60 and 70. Now you've got the right to buy it still at 50. So as the price of the stock goes up, the value of the call goes up. So they are opposites. Puts and calls. They're for opposite directions. But the way that they increase in value is the same. Remember, you can buy and sell options and profit from the move without owning the stock. You could say, I'm going to buy an option on Acme. I'm going to wait a few weeks. I'm going to see what happens. And I'm going to just sell that thing. All right. Football is the best example in the world to use for anything. And I'm not talking, well, okay, both football and football. Ari, if you're in the room, I'm going to use an example that is just for you. So where are my comments? There's my comments. So let's imagine for the second that you are, everybody knows that the Green Bay Packers have a season ticket waiting list that is a mile long. Imagine for a moment that the positions on that list, right? The next one up is number one on the list. Whoever dies or decides to sell, there's a first slot, there's a 10th slot, there's a 100th slot, there's a 1,000th slot. Right? There's this long season ticket list. Imagine for a moment that you could buy and sell positions, right? I'm sitting here, I don't know I'm number 5 on the list. Well, I can turn around and sell that to somebody else. So just for the sake of argument, there's an open market for spots on the Green Bay Packer season ticket list. Now you're a Packer fan, you've been waiting your entire life, you want these tickets. And you're a Bears fan. You hate the Packers with the passion of 1,000 suns, but you love money. You don't love money, but you want money. So you say, okay, here's what I'm going to do. I'm going to buy the 10 spot. So you go, I don't want these season tickets. Now, sure, I could buy them and turn around and sell them, but I'm a Bears fan. I don't even want to touch these things, right? It would just be, I'd get kicked out of Soldier Field. I'm going to buy the 10 spot. And you go and you spend $1,000, whatever it is, and you buy the spot on the season ticket waiting list at $10, and the number 10. And as people start dying off and selling, now you're at number 9. Ooh, now you're at number 8. Oh, hey, now my spot on that season ticket waiting list is getting more and more valuable. And you're fielding offers. Oh, hey, what? You get to 5. Oh, my. Now you get to 3. Okay, this is great. This is great. It's got a problem here. I really don't want these tickets. Yes, again, I could buy the tickets and turn around and sell them. Rather just buy my spot. So the closer you get to expiration, the more of a decision there is to make. But anyway, you finally get to number 1 spot, and you turn around to the guy at number 10 or at 1,000, you sell it to him. That's all options are. Hey, I've got the right to buy these tickets. I don't really want the tickets. I just want to buy and sell my spot in line. Same thing. Maybe you're a Liverpool fan buying tickets for Manchester United. Or, this is for you, Ari, if you're a Super Eagles fan and you're buying tickets for positions on the waiting list for Ghana National Football Club. Hope that makes sense. The analogy there is you never have an intention of buying the thing. You're only trying to make money off of the increase in value on the spot you're standing in. That's what options traders do, right? They buy an option, wait for the option to increase in value, and then sell that option. You never have to own the stock. There's 3 main reasons that you as a trader should consider buying options. Number 1, it is cheaper. It is so much cheaper to buy the right for a stock than it is to buy a stock. Let me walk through an example for you. There's going to be some math here. So let's say this is actually Apple. Let me make sure this is right. Yes, this is Apple from yesterday, I believe. Yes. So it's like 252. I'm going to say it's 250. So just understand that, yes, the chart says 252. I'm going to round it down to 250. So yesterday, Apple closed at, or was when I made this slide, was at $250 a share. If you want to buy 100 shares of Apple, it would have cost you $25,000. Why am I saying 100? Options are broken down into 100 share units. One option contract means 100 shares of stock. So that's why we're using 100 shares. 100 shares equals one option. Just bear that in mind. So if you want to buy Apple at 250, it costs you $25,000. Let's go out here to the option chain. Make this a little bit bigger. Didn't make it bigger at all, did it? Okay. So to buy the option, 1 month option for Apple at 250 would cost you $9.40 a share. So again, times 100, that's $940. So now you've got, on the one hand, I can just go out there and buy the stock for $25,000, or I can buy the right to buy the stock for $940. Do you see the difference in the I mean, not a lot of us have $25,000 sitting around to buy 100 shares of one stock. But $943, that is almost 25 times cheaper. Actually, it's a little bit over 25 times cheaper. So value number one, reason number one to use options instead of stock. It's cheaper. Requires so much less money in your trading account. I mean, I did one here recently that I was Plug. They're a electrical communication company. Like the stock was at $2, and I bought the 250. Anyway, long story short, it would cost me $200 for the stock, and it cost me $9 for the option. It is safer, and that is the one thing that I love about options. Much like we talked about with the insurance aspect of it, options are risk management encapsulated. It's less risk per dollar. Well, what do you mean by that? Well, let's say that you buy the stock of Apple at $25,000. All right, I don't know, I'll put 26 in this one. And you have a stop loss in place to lose $1,000. Your risk there is $1,000 of risk, and it costs you, I did the slide wrong, 25,000, it goes down to 24,000. You buy the call, the only thing you're going to lose is the money you spent. So $940. So the same movement of the stock, 1,000 versus 940, not saving much, but it is actually less risk. But here's the thing. Even if Apple goes to zero, your max risk is still $940. If you hold Apple and something happens and it gets wiped off the face of the earth, and you spent $25,000 for 100 shares at 250 and it goes to zero, you just lost $25,000. If you spent the $940 to buy an optional Apple at 250 and it goes to zero, you lost $940. That's it. Once you spend the money on the option, your risk is maxed out. There's no more money that's coming out of your account. The third reason is you get a better return, dollar for dollar. So, same exact example. We're going to enter our trade at 250, hoping that it gets to 300. And it does. On the one hand, we have made $50 a share. We had 100 shares of outright stock. So we made $5,000 in profit. Okay. Over here on the call option side of it, we entered the trade at 250. We exited that trade. We sold our option off to somebody else at 300. And we got $50 in movement of that stock option. Same $5,000. So they're equal in dollar amount. But look how much money we put at risk. On the pure stock play option side of it, we made $5,000 off of a $25,000 investment. 20% return on one trade. That's a heck of a trade. Fantastic. Over on the option side, we made $5,000 off of a $940 investment. That's a 532% return. Dollar for dollar, options have a higher return and lower risk than does stock. So 3 main reasons to buy options: lower capital, it's cheaper; lower risk, safer; higher return, it's wealthier. There are downsides to buying options, which is inherent in the stipulation of the contract. Let me go back to one of our slides. The inherent risk in an option is that it will, if you're using it for a trade, the inherent risk is it will what's called expire worthless. In other words, if you bought Apple at 250, you bought a 1-month contract on Apple at 250, hoping that it goes up, and instead it doesn't do anything. A month later, it's still at 250, or a month later, it's at 245. Your option has no value. No one's going to buy that option from you, giving them the right to buy Apple at 250 when they can go out in the open market and buy Apple for 245 or 249 or whatever it is. So the downside to options, the risk associated with it, and I don't mean risk from a monetary standpoint, because you absolutely know the risk at the beginning. Whatever you spend on the option is the most money you're going to lose. The downside is you have to be correct in the direction and the time. You have to get 2 out of 3 things right on that option. That it's going to go up, that it's going to go up to a certain amount, and that it's going to go up to a certain amount by a certain date. So you have to be 2 out of 3 correct in order for that option to have value. Over on the investing side of it, an option pays for itself in peace of mind. It's just pure insurance. On the trading side of it, you have to have done your homework on the underlying stock. Hey, I see that Apple's going up. I've got reason to believe this stock is going to go up. Therefore, I'm going to buy the option and sell the option after it goes up. Okay, the option didn't go up. Then you're out there saying, make it a little bit bigger. You're out there saying, hey, I got a golden ticket. I got a golden ticket. Hey, I can. You get to buy Apple at 250. You get to buy Apple. I know Apple's at 230. No one wants to. You buy Apple at 250. Oh, it's at 200. No one wants it. That is the inherent downside to options. Is that when you buy it, you have to be right about your assumption on what the stock is going to do. There are option plays out there that I use myself on a regular basis. One of them is called the wheel strategy. And can I show that screen successfully? Let me stop presenting and show you this strategy real quick. Stop that screen. Let me pull up Trading View. And let me go to my wheel strategy option. All right, so let me present the screen so you can see what I'm doing. Share screen. Presenter view trading. There it is right there. All right, so hopefully y'all can see that. Let's make it bigger. There we go. So let's go over to my options and let's go to income. So as of right now, I'm instituting the wheel strategy. I did this on Rumble recently. Let's go to Lumen. So I have sold a put down here at 450. I can't make this any bigger. You know what? Maybe I can make it bigger. If I do this and I shrink it. Hang on, let me do that. There we go. All right, that did make it bigger. All right, now it's too big. Give me a second. Come on, embiggen. And slide this over. Slide that over. Yes, it did. All right, make this bigger. That's better. All right, so I have sold a put. Now, you're thinking, hang on. We've been talking about buying options. Now you're talking about selling options. Yes, we are. And selling options is entirely, not entirely. Selling options is the other side of every option contract. There are only 2 types of options, calls and puts. And there are only 2 things you can do with those options, buy them or sell them. We don't have time today to go into the selling of options. Selling options is what I do. I want to be the insurance company collecting premiums, not the person out there hoping they don't get into a car wreck. Does that make sense? So I sell options. This will be probably lesson 3 of options, maybe lesson 2. But as a preview, let me just show you what I'm doing. It's called the wheel strategy for a reason. I sold a put. That means I gave someone else the right, but not the obligation, to put that stock to me. Right? So think about it from their perspective. I sold it, they're buying it. So as the buyer of a put option, they have the right, but not the obligation, to put their stock to me. So I sold that at 450. What does that mean? That means that at the end of, means that on January the 17th, I sold one. So that's for 100 shares. I sold one of the January 17th put options at 450. I mean, on January 17th, if the price of Lumen is at $4.49, the other side of my contract has the right, but not the obligation, to sell me their shares at 450. If it's at, and they may or they may not exercise that right. They may say, big deal. Or they may say, okay. If it's at like 3, then they're going to say, yeah, here, give me my money. What happens on 117 if the price of Lumen is at 451? Their contract expires worthless, and I get to keep the money that I spent. I collected, for a 1 month, I collected like $9 in premium off of this, off of $200 with leverage, a $200 investment. So that was like 4% return for 1 month. Not bad. Now, let's say for the sake of argument that the January 17th option expires and price of Lumen is above it. There's nothing to exercise, and this expires worthless. I collect that. I keep that $9. Well, I keep the $9 anyway, but that's the end of the conversation. No more money changes hands. I've made $9 off a $200 investment. What happens if the price is down here and the contract expires? Well, then I have to shell out $450 because that person on the other end has the right to sell me their shares for $450 a share, $100. So I shell out $450. Well, then what do? I turn right around and I sell a call option up here at $7, and I make 1, 2, 3% on that, on the $450 that I have that I spent. So if it was $10, now if it was I'm not gonna do the math in my head because I can't. Anyway, I sell that put option, that call option up here, and at the end of time, if price comes up here and is above it, then I get to sell those shares to someone else for $7. Not only do I get to keep my premium that they paid me, but the difference between 450 and 7 is what, 250? I get to $250. Pretty good. So this is a way, a practical example of how I would use options as a trader from the selling side. What about the buying side? Well, let's say that we're here and I have decided to go long. Okay. I want to go long this option. Let's say it's right here. All right. I've got this demand zone right here. And I'm saying, you know what? I'm going to wait until price comes back down in that demand zone, and I'm going to buy an option at $5. And I'm going to spend, I don't know, $10 to buy that option at $5. And I really expect this price to bounce off of this demand zone and go back up again. So I'm buying I'm buying the right to buy, to call to me. I'm buying a call at $5. And then price starts going up. Ooh. What happens to the value of my call option as price goes up? The value of that call option goes up. Because remember, I got a golden ticket every day. Hey, you can buy it at 5. Buy it from me. You can buy it at 5. Like, oh my goodness. Now it's at 750. It popped off at 750. Hey guys, you can buy it at 5. And someone comes along and says, and if it's me, I'm selling it. I'm getting out here before see this big giant wick right here. This shooting star. It's not a shooting star, but it's a big down wick. I would sell outright 750. I'd have my take profit set at 750, which means I just sell that option to someone else on the open market, and I made whatever the difference in those transactions are. But let's say it's here, and I say, okay, this thing is going. What are we at? We're at 10. This thing's going to 12, 15. Let me buy a call option, a 1 month call option at 15. Meaning, I'm sorry, at 10. I think it's going to 15, so I'm buying it at 10. Meaning, I'm hoping that in a month's time, I'm waving my golden ticket. Hey guys, you can buy Lumen for $10. Who wants it? Who wants it? And then this happens. And the end of the month rolls around. I'm like, hey guys, you can buy Lumen for $10. It's $5.31 on the open market, but you can buy Lumen for $10. Okay. This piece of paper is worthless. That is the downside to stock, to options, is that you've got to be right. But that's the same downside to any aspect of trading. You got to be right. Nothing wrong with that. Do your homework, follow your trade plan, and options become nothing more than a regular stock trade with less risk. One last downside to this, and I will end this and go to questions. The other downside is, let's say I'm back here again. I'm big in this a lot. Let's say I'm down here again. I said, okay, I think that Lumen is going to go to 750. I see this big tall wick here. There's obviously some sellers here that came into the market and started dumping stock. So I'm going to get in at 5 and I'm going to get out at 7. All right. I want to say I'm going to buy this stock option. I'm going to buy the call at 5 and I'm going to get out at 7. So price is going up. Oh, it's going great. Oh, it's going great. And we are, boom, we're right there. And I'm like, all right, we're here. We'll go there. I'm like, hey guys, I got a golden ticket. You can buy Lumen for $5 from me. And it's $7. I'm like, yes, I'm out. I'm out of this trade. It's fantastic. I made my money out of this trade. I am so happy. I predicted that move. It went from 5 to 7. I'm a genius. I sold my golden ticket to somebody else. I made my money. I never had to buy the stock. I just profited off the move. I am such a genius. I am such a genius. Oh my goodness. Oh no, it went all the way up to 10. I could have held until it got to 10. That is the other side of options, the negative side of options. You put a cap on your profit, right? You say, I'm going to get in here and I'm going to get out there. And if it goes to the moon, I only get between these two prices. That's all the profit I'm going to get. You have to be okay with that. You have to be okay with the positive side. Hey, it's a trade-off. I need to be emphatic here. It's a trade-off. I don't even do that. It's a trade-off. I'm giving up some profit, but I'm getting a whole lot of risk management built into it. And that is the beauty of options. It does require a slightly different mindset, because if you're holding the stock, you want it to go to the moon. If you're holding the option, you really only want it to go to where it's going to go, where you had planned for it to go, and then get out, because you don't really want to sit there and feel the pain of, oh, what if, right? But everything in life is a trade-off. And the beauty of options is what we mentioned. It requires so much less capital. I mean, I'm trading an option account right now with $500. I did an option play the other day for $200. With leverage, it was less than that involved. So much less capital involved. So much less risk involved. You're never going to lose more than the money you paid. I bought an option for $500. Come what may, the worst that will happen to me is that I'll lose that $500. That option, that golden ticket is just worthless. And well, now I forgot what the third positive was on my slide, but those are the main two reasons. And the return, right? The difference between spending $25,000 to make $5,000 or spending $1,000 to make $5,000. The dollar amount into your account's the same, but the cash on cash return is radically different. So for those reasons, options are an amazing option for people. Now, options are mostly used for stock. And if you aren't a stock trader, hang around for 15 minutes, and I think stocks are up next. Is our, hang on, where is my media assets? Where's my, there it is. Yes, stocks are up next. So as we go through stocks, and then 15 minutes from now, as we go through stocks, just understand, and I'll probably mention a little bit, that all of the plays, all of the ideas, all of the plans and the trades that you can do in stocks can also be done in options. There's a way to do that. And we'll get into it with stocks, but that element of, I don't have the money. I would love to trade Apple, Tesla, right? Everybody loves Tesla. Sorry, if you've ever watched Shrek. Donkey. Everybody loves Parfait. All right, everybody loves Tesla. But I mean, it's $100 and some odd a share. Not everybody can afford Tesla. Everybody can afford a Tesla option. So those are the main reasons. Does anybody have any questions? I've got a little banner. I'm not going to pop it up. Does anybody have any questions? It is question and answer time. If we don't have any questions in the next 2 or 3 minutes, I'm going to put up the wait screen, and we've got another one session starting in 15 minutes. If you have a question, now is your time to ask that question about options. And again, this is module 1 of how to trade options. So there's lots of that's going to be going on in the coming weeks as we deliver those lessons. So nobody has any questions on options, then I'm going to put up the the screen, and we're gonna have another session in. Hang on, let me get rid of that, and let me get rid of that. And our next session starts. Present. Stop presenting. Present. Share screen. Window. Entire screen. Our next session starts in 15 minutes, 14 minutes. How do I get this to say 14? Oh dear. Give me 1 second. Well, our next session starts in 14 minutes. Let me get this to work correctly. 15, fine. We'll do now we'll have to do 13 minutes now. All right. Save and do it. Save and hit that and hit that and hit that. There we go. Next session starts then. I will see you guys then. All right, guys. Thank you for being here. Thank you for being patient. We had a great first session with how to trade options. If you were not in that first session, we went over the basics of options. If you ever wanted to trade them, and these things are going to be probably still available on YouTube if you want to watch the full 6-hour live stream to catch them. But the individual pieces will be available in our members area as individual lessons. Today, this particular session is going to be about how to trade stocks. And let me pull up the extra screen here where I am trying my best to multitask. And that's not it. We're going to go to this other one. Give me 1 second. So, how to trade stocks. There we go. And we're going to go to present slideshow, present review. And we're going to see, is that in fact? Yes, it is. All right. So, we are presenting. Nope, we're not presenting that. We're going to stop and stop share, present, share screen. There we go. I knew there was a way to do that. Fantastic. So, sorry about that. I shouldn't have narrated me fumbling around trying to figure this out. Okay, so the first session is on how to trade stocks. By the way, here's the layout of today and what we're going to be doing. So, as I mentioned, we had our first session on how to trade options. Went really well, and we will do more of those in the future. We have an entire course based around each one of these, and today we're only doing the intro lesson. I can't teach everything in an hour. So the introduction on the course, how to trade options, how to trade stocks, how to trade forex. By the way, I know what you're thinking. Hey, he's just out here shilling for it. Nope, that's not it. Let me think. Go away. There we go. He's out here shilling for his course. Obviously I'm doing this, and the replays for this will be in the members only area. But all of these courses are going to be taught live for free. There won't be any replay for you. But if you want to learn how to trade options or stocks or anything, come join us live for free. I'm doing this as a service to everybody else. We here at Godly Trading. By the way, I should have introduced myself. Hi, I'm Pepper. This is Godly Trading. Thank you for being here. We are here to help fathers and anyone really that's responsible for a household, whether that's a single mom or a 20-year-old and his goldfish, whatever the household, whatever family means, with the responsibilities on your shoulders. We're here to help fathers fulfill the command from Proverbs. It says, a good man leaves an inheritance to his children's children. I wrote the book, Trading with Joy, helping you overcome that weight of responsibility and the misery that can sometimes come along with trading. And there's my logo there, Godly Trading. And I do feel, why am I teaching this live for free? Well, I feel like I'm on a mission to help people go through avoid the pitfalls that I went through. Great story that I love to tell. Guy's walking down the street and falls into a hole. Can't get out. And he looks up above and he sees all the people passing by on the sidewalk above him. And he's calling for help and no one will help him. And finally he sees this priest walk by. He says, hey, Father, I'm down here in this hole. Can you help me out? And the priest looks down in the hole and pulls out a pad and writes down a prayer and throws it in the hole and says, bless you, my son, and keeps on walking. Oh, that didn't do him any good. So he's still screaming for help and he sees his doctor walk by. Hey, doc, I'm down in this hole. Can you help me out? Doctor looks down the hole and pulls out his prescription pad and writes him out a prescription for Xanax and throws it in there and says, the bill is in the mail. Keeps on going. And now our poor fellow's in the bottom of this pit and he's blessed and medicated and he's just ready to give up. And then finally, out of desperation, he sees his buddy Bob walk by. Bob, help me out. Bob, I'm down in this hole. Can you please help me out? I'm just ready to curl up in a ball and die. Next thing you know, Bob jumps down the hole with him. And he's like, Bob, what are you doing? Now we're both stuck in this hole. And Bob says, yeah, but I've been in here before. I know the way out. And that is me. That is the purpose that I've been given and the reason I wrote the book was to help you overcome the misery that comes with trading. And when I was a stock trader, I'm a stock trader again now, but back when I was a stock trader before, oh my goodness, the misery that could come with someone who wasn't prepared to tackle the stock market without the proper frame of mind. I remember, oh my goodness, I would love to, I'm trying my best to remember the stock. I don't remember the stock. It was some sort of commercial electrical equipment company. I don't remember the name of it. I had a stop loss on it. That's what you do, right? I was a brand new trader, but I knew enough to know that I needed a stop loss for everything. Well, lo and behold, I'm watching the markets and, the market opens up and I'm looking at my screen. Wait, what? What just happened? The stock opened, gapped under my stop loss. And so it's still alive. The trade is still on. I'm down $200, $300, $400 and my stop loss never triggered. I'm like, what do I do? What do I do? What? And I'm just literally, I was immobilized for like 5 minutes, staring at my screen, talking out loud to whoever. I was totally unprepared for what all came with trading stocks. I switched to something else later, to Forex. We'll get into that next session. Back around to stocks now. But the whole purpose of that book is to help you overcome the noise, for lack of a better term. I call it the barrel of monkeys that goes inside your head when you try to trade. And stocks are where most people start in their trading journey. By the way, if you're in here, let me know how the sound sounds. I did some during the break between the two sessions. I did some fiddling with the sound to try to make the speaker work, and it doesn't work yet. So if you can hear me, even if you're not normally a commenter, would you please comment down in the comments? Let me know if I sound all right. Stocks are where most people get in the U.S. get their start on trading. Sorry, making sure I'm not muted. As a result, when you hear the term trading, when you hear the term investing, you immediately go to stock, and that is perfectly understandable. I forgot to do this, by the way, just so FYI, make this bigger. Everything today, this disclaimer, is for educational purposes only. Today is all about education. I'm not doing anything specifically trading. I'm not going to show you the actual trades. We do send out a newsletter. I should have plugged it last hour. We've got a free newsletter that you can go to. Hang on one second. Let me show you the link to get to the newsletter, and it is here. So as you go to godlytrading.com, and pretty easy to remember. That's a logo everywhere. Godlytrading.com, and you can sign up for that free newsletter. And in the newsletter, we do give out picks of the week for the upcoming week, both in commodities like gold and silver, in stocks, and in Forex. So if you're interested, that aspect of that's still for informational purposes only. But today is all about education. So how to trade stocks. Let's start from the basics. What do you need in order to trade stocks? Well, first thing you need to do, you need to define what it means to be a successful trader. You have to define, before you get started, ask yourself the question, why am I doing this? What do I hope to achieve? I'm on a journey to be a successful stock trader. How am I going to know when I am a successful stock trader, right? Where does success live so that I know when I get there? So this is I call it the trading success formula, right? Success equals your discipline plus your capital, however much money you're trading with, plus your strategy. And all of that gets multiplied by time. That is how you have success long-term over and over again in any market. But specifically in trading, my face is in the way specifically in trading. Let me see if I can do that. There we go. What do you need in order to trade stocks here or around the world? Well, as in the trading success formula, the first thing you need is a proper mindset. Mindset's a whole other course. All right. Today we're going to be doing a little bit more with the nuts and bolts, a little bit more with the clickety-clickities. That's with the mindset. The newsletter, I mentioned it before. The newsletter is broken down into sections. Every single one of them starts off with the biblical basis. What lesson can we learn from the Bible to carry with us this week as traders? And then mindset. How can we consistently be improving our mindset in whatever market we're in? And then I break down into markets. And so there's a mindset aspect that is universal to all trading. Doesn't matter what you could be trading Pokemon cards, which the phrase trading Pokemon cards is the extent of my knowledge on trading Pokemon cards. But whatever it is you're doing in life, mindset is key. You also need capital. You need money to trade with. We mentioned in the last session about options. The beauty of options is it requires less capital to trade stocks than does stock trading stocks. So you do need capital to trade stocks. And if you've got $1,000, you're probably not buying a lot of Tesla stock or GE stock. If you've got $1 million, you can buy whatever you want. But first thing you need is your proper mindset. Second thing you need is some money to trade with. Third thing, and we've got a session at 1 o'clock. Come back for that. 1 o'clock Central. Everything, all these times are central. We had this session on introduction to Darwinex and how to fund your trading account. We're going to go over some ways that you can trade without a lot of money or with no money. You need your tech, whatever that we're going to go over in a second. You need a broker, you need a strategy, and lastly, you need some stocks to trade. So let's start off with the tech. What do you need to trade stock? Boy, it's 2024 or 5. Duh, it's New Year's Day. It's 2025. I first started trading around 2005. goodness, I've been trading for 20 years, off and on. That didn't get serious about it till like 2017. But man, I just suddenly feel old. So what kind of tech do you need to trade stocks? Well, you need something with access to the internet. And these days, that's the amazing part. The further we get into the future, the easier it becomes from a technological standpoint to trade anything. You need a desktop or a laptop. You need one of these. You don't need all of them. You don't need the other ones. If you've got a smartphone, you can absolutely trade on your phone and never need a laptop or a desktop or a tablet. So you need something with access to the internet. Some great pieces of software out there. TradingView, TradeStation, MT5, and whatever the broker is that you have. You need access to charts if you're going to be a stock trader. The way I trade is technical analysis, not fundamental. I don't look at a company and think, what is the market outlook for that company? Who's managing that company? What kind of debt to income ratio? I don't look at fundamentals of a company. I don't care what the fundamentals of the company are. I look at the chart and say, is the price, I'm not trading the company, I'm trading the price. Is the price of this company, I'm not investing. I keep interrupting myself. I don't invest. Investors generally look at fundamentals. Traders can look at fundamentals on the long term, but on the short term, if you're a day trader, you don't care what the company does. You just want to know what the price is doing. So you need to access a trading chart. I highly recommend everybody start with TradingView. I'll show you that in a minute. Why? Because the beauty of TradingView is it's free. Anybody can create a free account and use it anywhere. Whatever you do on a chart, you can go to any other internet connected device, whether it's a phone or a tablet or a laptop or a desktop or whatever, something in your brain. And the chart's exactly the same. And the way you move it is exactly the same. There's no mobile version that's different, right? TradingView is ubiquitous across all platforms. That's why I love it. And it's probably the most, like the beginning go-to. I love trading. TradeStation is its own thing. It's its own broker. It's its own platform. They're fantastic. You can create a free demo account there. I highly recommend everybody. If I can recommend anything, it's start out on demo for 6 months. Build yourself 6 months of success and track record on demo before you put real money at risk. If you've never done it before, let's say you're a successful trader already in Forex and you want to branch out into futures, still trade on demo for 6 months to prove to yourself that you know what you're doing. MT5 is a great platform. It's mainly Forex, but I'm going to show you in the 1 o'clock session. There are MT5 platforms out there that trade stocks and commodities and all those things. And then broker specific. Robinhood has its own platform. Charles Schwab, E-Trade, they all have their own platform. So somehow or another, you need some piece of software that gives you access to a trading chart. You need a broker. Here are some great ones. If you don't have a lot of money, Robinhood gets a bad rap because yes, they do. I'm going to use a term here. They front run your trade. What does that mean? They have high speed connections. And when you hit send, they're able to, let's say you're going to buy Acme at 100. They're able to jump out there. In the time you hit send, before it gets to the market, their computers are fast enough. They take your trade, they sell it to someone else who then runs out there, buys it for 100.001 and sells it to you for 100. I'm sorry, buys it for 99.999 and sells it to you for 100. So yeah, they make their money because they're free. You don't pay anything, but they make their money by sort of selling your trade. But big deal. They're making money off of you. You're still making money. Big deal. Robinhood is great because you can buy fractional shares. Let's say you want to buy Tesla and you only got $5. You can buy $5 worth of Tesla. There's another one out there called M1 Finance, but everyone knows Robinhood. E-Trade, Fidelity, Interactive, those are all the big players in the retail market. E-Trade has the great commercials with the baby. It may not still have the commercials with the baby, which is a shame. But you've heard of all of these. But if you're just starting out and you're broke, go with Robinhood. You need a strategy. We're going to go over those today. That's why I said this session is less about mindset and more about the nuts and bolts and the strategy. We're going to go over the strategies that we're using today. And you need a list of stocks. Remember, there's a world of difference between a trader. We're talking about strategy here. All right. There's a world of difference between a trader and an investor. And we're here to teach trading, not investing. Now, I do invest. Matter of fact, I've got some fantastic and income ETFs that I invest in. And I actually have a section of a newsletter that highlights one of those each week. These are the ones you buy it and they spit you out dividends every month or every week or every year, whatever it is. Right now, my portfolio put $1,000 into it, $990 into it. And it's projected to make me 17% a year. So I put money into it, and every year I get 17%, and I don't do anything. All right, that's investing. We're here to talk about trading and how to specifically trade stocks. So a little bit of basics. If you are a more experienced trader, just hang on with me. If you're an intermediate or never traded stocks before, this is for you. So there's only three directions that the price can go: up, down, or sideways. That's it. And that is why I say that anyone can trade. And I use the analogy of the famous French philosopher, Gusteau. They made a documentary about him. They called it Ratatouille. It was animated. Anyway, what I took from that documentary was Gusteau says anyone can cook. Anyone can trade. Trading is like juggling. And I do know how to juggle, but I won't juggle right now because last time I did, I hit my keyboard and bad things happened in my live stream. Trading is a skill like juggling or cooking. Anyone can trade. And part of that is that it's simple. Trading is simple at its core. There's only three ways that price can go: up, down, or nowhere. And you think, well, that's oversimplified. No, it's just simplified. Like we talked about on the options. There's only two types of options: a put and a call. There's only two things you can do with them: buy it or sell it. Social media, a lot of people on social media try to make, let me be very emphatic here. Where's my face at? A lot of people on social media try to make trading more complicated than it really is, or to make it seem like it's more complicated than it really is. So you'll give them money so they can crack the code for you. Trading is dead simple. Price can only go up, down, or sideways. That's it. Doesn't get any more simple than that. If you think it's too simple, no, it's just simple. Prime example. I believe this is the S&P from 2024. Yes, it is. This is the S&P 500. By the way, this is a TradingView chart. Highly recommend TradingView. I don't make any money off of TradingView. I can't recommend. It's a free account. I can't make money off of it. I use it. And the thing about TradingView is it's totally web-based, so anybody can sign up for anything. So this is the S&P 500. Now, let us take a look at the directions that this thing can go. So over the course of 2024, it went up, as you can see. But over the course of 2024, there were times it went down, and there were times it went sideways. So when I say that there are only three directions the price can go, depending on your outlook, say, well, price went up. Okay, yeah, it did. But somewhere right in the middle, price went down. And somewhere else, price went sideways. So at any given time, price can be going a different direction. Don't get lost in these weeds. I shouldn't be saying this, but I'm going to. At any given time, you can be in an uptrend, a downtrend, or a sideways range, depending on where you're looking. A 1 minute chart can be sideways, a 5 minute chart can be up, and a 10-minute chart can be down, that kind of thing. There are market strategies out there for, let's try this one. There are market strategies, nope, let's go back to that, out there for each of those. And there's only three strategies in general. I am simplifying this. You've got trend. Hey, I'm going up. The price is going up, and I'm going to go up with it. I'm going to buy it on January the 1st, and I'm going to sell it on December 31st. That's trend trading. I am a trend trader. You've got trend. You've got counter trend, which would be, hey, price is going up, but there's this little pullback. So I'm going to ride that little pullback. That's counter trend. The overall trend is up. Small trend went down. I'm going to try to do that. And you've got range trading. All right, I'm just going to buy it at the top and sell it at the low, and just as it keeps bouncing back and forth inside this box, I'm just going to keep going long and short every time it gets to the top of the box and the bottom of the box. That's it. Only three directions: up, down, and sideways. There's three ways to trade it. Ride the trend, go against the trend. Honestly, range trading is both of them. You're when you get up here, you're counter trend trading, and you're going down here, you get counter trend trading. So it's basically just a small microcosm. It's a subset of these. So here we go. Trend, counter trend, range. Three directions, three trading styles. I am a trend trader for lots of reasons. This is here. I'm a trend trader for lots of reasons. In stocks, I'm a trend trader because stocks are built to go up. Not all stocks go up, obviously. Indices, excuse me. The Dow Jones Industrial Average, 30 stocks, has gone up since it started at, I forget what we started, 100, 900. When I said they're built, by the way, if anybody has any comments or questions, oh, fantastic. Thank you for letting me know. Put them in the chat. I just noticed that I had a comment there. Sounds good. Thank you very much. Um, the Dow Jones Industrial Average is put together by the editors of the Wall Street Journal. Did you know that? All right, they get together and decide which 30 stocks go into it. At one point, I think U.S. Steel is the only stock still in the Dow Jones Industrial Average since it was created. So they're constantly changing it to make it go up. So that is, I think, the primary reason where you should be a trend trader with indices, the S&P 500. They're constantly changing what 500 stocks are in there. The Dow Jones Industrial Average, the Dow. They're constantly changing it to make sure they have stocks that are going to make it go up. So it's designed to go up over time. I'm a trend trader. The higher up on the time frame you go, the more the trend takes over. Down there on a 1 second chart, a tick chart, a 1 minute chart, you can go whatever you want. But the higher you in 1 minute, 5 minute, an hour, 4 hour, daily, the higher up you go on that chart time frame, the stronger the pull of the trend. So I am a trend trader. And so I'm going to be showing you the 3 trend strategies that I show and I use and I am demonstrating and using my money to demonstrate to you and the folks in the Facebook group these 3 strategies. You've got a pullback, you've got a trend pullback, a trend resumption, and a trend breakout. Those are the only 3 strategies. I'm trying to keep things simple, right? There's 3 directions price can move, up, down, and sideways. There are 3 types of trading: trend, counter trend, and range. Inside of trend, there are 3 strategies. Wait for a pullback, wait for the trend to resume, or wait for the trend resumption to break out. Now, I've given them cutesy names. And here they are. Frank, Forrest, and Bob, the Trend Friend Trio. Now, okay, Pepper, you kind of got off the deep end here. Why? Oh, why do we have cartoons? I referred to this first strategy. I gave it the name Frank way back when because I called it dead simple. I thought dead. Oh, hang on. There's that old bit about Francisco Franco still being dead. And I thought dead simple. We got Frankenstein and Forrest Gump, dead and simple. Then I added Bob. Bob stands for breakout. Bob the Builder. That's why they're here. So these represent, they're going to be little icons, the 3 different ways that I trade a trend. And let me just show you this. So let's just take, overall, we are in an uptrend. I'm going to zoom in on this one area and show you how I would use these 3 trading strategies to trade differently this little section of time of the S&P 500. And again, today is going to be a little bit more strategy, nuts and bolts, trading related. But don't forget, the first thing you need to trade stocks is proper mindset. I'm talking about strategy, but mindset is the most important thing, the key. We covered, it's the first thing we talk about in the newsletter other than our biblical principle. And we're going to have an entire course, again, free course, live, pay to get the replays of it on mindset. So let's dive into this. So this is Forrest. Forrest is the pullback. So price is going up and then it has a pullback. So what you do is you wait for what you think is going to be the bottom of that pullback. In this case, we've got a moving average. We've got 2 of them here. One of them doesn't need to be shown. We've got a fast one and a slow one. Why do we have 2? We don't show the first one. Well, all we're doing is determining, are we in an uptrend or a downtrend? If the fast moving average, do it this way. The fast moving average is above the slow moving average, then they're both going up, then you know you're in an uptrend. If it's the other way, you're in a downtrend, right? So there's no point showing it. Long story short, this is what we do. We wait for those little blue dots to tell us that price has created the highest high that it has had in the last 50 days. Then we wait for a pullback to that moving average. So if we're trading the Forrest, the pullback strategy, we're going to get in right there where it points at. That's our moving average. That's our entry point. Frank, on the other hand, waits for that pullback to happen and then waits for one candle that says, hey, I think that the time of pullback is over with. I think that the time of the uptrend is back in place. I think this one candle represents the resumption of the uptrend. So Frank would get you in right there. That big, called an engulfing bar. Anytime you look at these, they're called candlesticks. We'll probably have an entire course on how to read candlesticks, but all it shows you is the high, the low, which is the little lines, and then where it opened and closed. If it opened higher, then it closed. If it closed lower, then it's a red bar. If it opened down here and closed up here, then it's a green bar. So what's the difference between the Frank candle and the Forrest candle? Well, think about it from the standpoint of what happened that day. All of the interaction between buyers and sellers. The day before was a red candle. It closed lower. It opens the next day. It gaps up a little bit, right? Because you see generally speaking, you would imagine that the candles are going to open and close at the same spot, but they don't always, especially in stocks, because you have a 12-hour, 16-hour difference between the open and the close. Sometimes they're different. Well, this one opened up a little bit and ran all the way down. But then what happened? The buyers came screaming in, and it closed higher than the highest the previous day. It's called an engulfing candle. When this candle is bigger than this candle, and it engulfs it. And the psychology inside of that candle is what you need to think about. Okay, price has been going down for day after day after day after day. Today, price tried to go down and couldn't. And not only did it not keep going down, it shot up again. So that tells me, hey, I think that the uptrend is back on, baby. I think it's time to start riding this thing up. That's what Frank does. Frank waits for the pullback and waits for that one signal that says, hey, time to resume the uptrend. That's Frank. What does Forrest do? Forrest says, I'm a little more conservative. I'm going to wait until we break out from that full downtrend. We went down. But on the pullback, we may have gone sideways a little bit. We had that first little up, and then we're back up. And Bob says, find your right button. Bob says, I'm going to wait until not only has the uptrend resumed, but we've confirmed that the uptrend has resumed by putting in the higher high than we had when we had our pullback. So those are the three ways that that I recommend. Okay, recommend is a strong word to use in the trading world. That I trade. Those are the three ways that I trade a trend. They're all centered around a pullback. I mean, you can look at a trend and say, I'm getting in right now. Do a little bit of analysis on this and find ways to trade these things. There's more to it. We don't have time to go into the more to it. This is the basics of it. There's a dip. Price has done this. And the three different strategies get into it at different points on that dip and that uptrend. So what are the pros and cons of this? Well, excuse me. Forrest is going to get you in at the best price because you're getting in at what we think is the bottom of the pullback. That's going to be the best price. Frank gets you in close to that good price, but also gives you a little bit of confirmation. Bob gets you the most confirmation. So they each come with their own set of trade-offs. Those are the pros. What are the cons? With Forrest, you think that entry point is going to be, you think that's where the pullback is going to stop it. Sometimes it just keeps going. Sometimes it's the beginning of a downtrend, right? So Forrest is the most risky because you are getting in short. You're catching a falling knife. Put it that way. What does that mean? How dangerous would it be to catch a falling knife? It's dangerous. Someone's coming down. You think, well, if I just stop it right here, this is going to be the bottom of it. Frank, the downside is, what if that one candle is an aberration? What if that, because it's one candle of confirmation. What if that was just an interesting day and it kept on going? Kind of the same risk associated as with Forrest. And then Bob, what if the breakout fails? Also with Bob, you're getting in at the worst price of the three. Frank's kind of the middle ground, the best of all three. You get some confirmation and you get a decent price. Not as good as Forrest, but you don't have as much confirmation as Bob. Let's talk about this. So, like I said, Forrest here, you get in. This is the getting in on the downtrend. You're trying to pick the bottom of the downtrend. Well, sometimes it just keeps on going. With Frank, you think that one candle signals the end of a downtrend, but sometimes there's a thing called a bear flag. I'm going to that today. That's down and whoop, and then keep going down. That can happen. And with Bob, now Bob has the least amount of risk because when breakouts fail, they rarely ever fail into a massive downtrend. They usually fail back and form a range. If price had been going up and starts ranging sideways, make myself bigger here. If price goes up and starts ranging sideways and then has a breakout, a lot of times that initial breakout will fail and then it'll come back into the range and keep going. and then decide what to do next. So those are the downsides to those, but they are dead simple strategies. And look, how do you mitigate that downside? You test it. You back test. You take these strategies, and I don't pick one of these. I trade all three of these at the same time based on what I'm seeing on the charts on that day. What do you mean? Well, that goes to our last item of what do you need to be a stock trader. You need, get your face out of the way, Pepper. That is the exact opposite of getting your face out of the way. You need a list of stocks. You need, and this is what I use, about 30 to 40. So that's a lot. Initially, yes. But after a very short period of time, a couple of weeks at most, you're going to be able to click through those, click, and your eyes going to be looking for a thing. You're looking for one or two things. And you'll be able to just cycle through these every day. I highly recommend, if you're going to start trading stocks the first time, trade them on the daily chart for a couple of reasons. Daily chart's the slowest. You have this amazing, the stock market closes, right? Forex doesn't close. I love Forex. Forex is my main bread and butter. We're going to get to that next session. Forex is always on. Stock market closes like 3:30 my time and doesn't open until 8:30 the next day. You've got that entire time to do all your analysis. You can do anything you want. Stocks price is not going to go very much, right? Sure, there's some aftermarket movement, but in general, that window of closed time gives you ample time to do things. That's why I recommend trade the daily chart first, because you've got so much time to do all your stuff. So having 30 to 40 is not going to take you as much time as you think it's going to. Initially, yes, it may take you an hour to get through all of them, but you've got 16 hours to do it. 16 hours, 15 hours, 17 hours, something like that. So have you a long list that you're going to build slowly over time. Try to spread out the stocks that are in that across the different sectors. We're going to go over that in a minute. Make sure that you are trading stocks that have enough volume. Don't go for penny stocks. Hey, this thing's only 35 cents. There's only 4 people a day buying this thing. Go for, if you're just now starting off, go for companies you recognize the names of. That's the easiest way to do this. There's a price consideration here. If you are buying, if you're actively buying and selling stocks, the entire stock, whether it's one stock or one share or 100 shares, you might not have enough money to trade Tesla. You might have to go to something like a Plug that's at $2 a share, or a Lumen that's at $5 a share. Rumble, I had an option on Rumble a month ago at 5, and it's at 10 now. So there's price considerations to consider. Although again, watch our session from the last hour on options. With options, you can trade everything you're going to trade here. Right? Just think of options as another button that you click when you're trading stocks. And you can always use a screener. Now, let me show you. What do you mean a screener? TradingView has a great screener. It's not okay. TradingView has a screener. I shouldn't say it's great. It's okay. It's adequate. It will do the job. Yahoo Finance has a screener that is adequate and will do the job. Finviz.com. I don't have any affiliation with them. They have an amazing screener. So I have a check mark there. I also have a red X. It is, for a rookie, it is way more than you need to be thinking about. Finviz will overwhelm you with options. Just go to TradingView if you're getting started. I can walk you through how to use it. Use you a screener to build your list of 30. Start off with some things that you recognize. Tesla, Apple, GE, whatever it is. And then every day as you start reading articles, start watching podcasts, listen to podcasts, watching videos. And as they mention something, look at it and say, okay, I'm going to add that to it. Now this list of 30 to 40 stocks is going to change over time. You're going to find that these things don't fit your personality. Stocks do have personality. You're going to find that, hey, I thought this thing was going to have plenty of volume, but it's just all over the place. There's just not enough people trading this thing. So using the screener, using other methods, just whatever you hear, constantly be not turning over all 30, but maybe every month, look at replacing 1 or 2, until you find what you're looking for. I mentioned stock sectors. There's 11 of them, and they're different. So stocks are broken down into these 11 sectors. So Tesla is a manufacturing company. They are consumer discretionary. Apple is a communication company. Microsoft, information technology. Kroger, consumer staple, right? Energy, that's GE. Every stock belongs in one of these 11 categories. Now, the S&P 500 is made up of 500 companies that are broken down in this weighting. You look at it, information technology, tech companies make up a third of the S&P. Now, I'm not showing you this stuff, but you can say, okay, I need 3% of my 30 to be energy, and I need a third of it, so I need 10 of them to be. No, this is one idea. Well, maybe I can recreate my own S&P. What I don't want you to do is I don't want you to have Microsoft and Apple and GoDaddy and just all of these tech companies, nothing but tech, right? You need to spread them out across different sectors. And maybe you only have 2 or 3 sectors. Just the idea here is make sure that you are diversifying the types of companies that are inside this list. But again, just start off with what you know. Review their chart history. If you Apple, start off with Apple. All right, everybody trades Apple. Go back on 2-3 years and just watch it. Just look at it. TradingView has an amazing thing called replay, where you can click a spot in time and it cuts off the future. And you can click candle by candle, day by day, and see how price moves and start applying these 3 strategies. Okay, hey, look, I think there's a Forrest set up. Let me see if it would have worked. Hey, I think there's a Frank set up. Let me see if that would have worked. Go back test. That's what I'm saying. Go back in time and get to know how they move. They move, every stock moves a little differently than every other stock. Get to know that and start adding them slowly. These strategies that I mentioned, they are trend trading strategies. Lots of people out there popping up here, by the way. If you have a question, if anybody has any question, just now's your time to ask. Any question for anything, for any reason. These strategies that I'm showing you, that I'm mentioning, are trend trading strategies, and they're just a few of hundreds of strategies. Any strategy can work. Like anyone can cook, anyone can trade. Not everybody can trade. Not every strategy will work, but any strategy can work. Just make sure you back test it. I'm always, I use the term in the market. I'm always on the lookout for a new strategy that I've never heard before. Frank popped up on my radar about 4 or 5 months ago. I thought, oh, that's interesting. I love it because it's dead simple. Now, I didn't explain the details of Frank. We can do that another time. But I told you what it does, essentially. Frank is one moving average as the whole on a weekly basis, and that one engulfing pattern. That's it. That's all Frank is. Oh, this is dead. I love a dead simple strategy. So I tested it out. Oh my goodness, this thing really works. You know, it's fantastic. Doesn't give you a lot of trades per day, but big deal. Of the core, I'm looking to add a complementary piece to my Forex trading. So always keep your mind open. Always be learning when it comes to trading stocks. Always keep yourself up to date on the news. That's one of the things we do in our newsletter. GodlyTrading.com. Sign up for the newsletter. It's free. Is we give you the market wrap up for the previous week, the market outlook for the coming week. What's some things that are going on? Be aware of what's going on in the news. I own Carnival Cruise Line stock because we're cruisers and we get benefits for owning stock. But I also traded an option on it. I'm selling options against the stock that I own. And I knew there was an earnings announcement. So you better believe I'm watching the news and trying to find out what happened with Carnival's earnings announcement. Oh, no, it gapped up a little bit. So is it getting close to my option call? No, it didn't. So be aware of the news. Be aware of the individual stocks. Be aware of how they play. And then always be adding. At the same time, don't just take these 3 strategies and say, I'm going to trade these because Pepper said so. Test them out for yourself. All right. Luke in Acts. Is it Acts? I think it's Acts. Luke said that this is from the Bible. Who's Luke? St. Luke. The Apostle Luke said that the Bereans were more noble than everyone else because they tested the scripture. They listened to what Paul was telling them. And every day they went home to say, oh, yeah, Paul's right. That is what that says. That is what that means. I'm telling you these strategies work. Test it for yourself before you do anything. Take them and demo test, back test these things. Pick a stock, go to TradingView, use replay, and see how well Frank works on Apple. See how well Forrest works on Apple. See if Bob does his thing on Apple. And then that's when you lay a foundation on this list of 30 stocks. And again, 30, 40 stocks. Guys, I trade Forex and gold. So that's 29 things. I go through I trade for 5 minutes a day. I kid you not. I go through all 29 charts with entries in 5 minutes because I've been doing it so long. And you'll get there with your 30 stocks. So just go click, 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 click. I'm just looking for one thing, and as soon as that one thing pops up, especially with the indicators I've got. By the way, I didn't mention it. I have indicators for Frank, Forrest, and Bob that anyone who's a member of the Facebook group, which is free, can have, right? Their own trading view. Anybody can have those. All you're doing is looking for the little arrow. Hey, look, there's a Frank entry. Let me stop and take a look at that. So 30 stocks is not going to be a big deal. All right, if no one has any questions, I'm going to go ahead and pop up the timer for our next session. And we are talking about Forex, my favorite. Forex is absolutely my favorite. So with that, guys, thank you for being here. I will see you all in about 20 minutes. All right. We are back and ready to go. We're a little bit early, but I've got a couple of questions that some really good questions that have come in from let me just put them up here. I don't know how to pronounce this. Mock Farms. Um, does one need to be very experienced to trade live? What is the minimum one needs to trade with? And what ways you recommend to raise funds? Those are fantastic questions. I'm glad you asked them because they go right into everything that we'll be talking about today. So here is the schedule for today. Now, if you'll notice, where's my hand at? If you'll notice right here, how to fund your trading account and introduction to DART, those two, especially the how to fund your trading account. I'm going to be going into that very question of, which hand is it? This hand. That question of what do you do if you don't have enough money to trade with, and how can you overcome that? Now, as far as how much do you need to trade live, I'm glad you asked that as well. It depends on the market, and I'm going to get into this next session on trading Forex. That the amount that you need to trade live is so much less with Forex than with stocks. But as I said, with Robinhood and other companies like it, where they allow you to purchase fractional shares, you can start trading with whatever you have, $10, and you can buy $10 worth of Apple. So there are companies out there that have no minimum requirement. Robinhood does not have a minimum dollar requirement, and both to open an account and to actually trade. You can whatever you have to trade. Now you're trading a small amount, so you're going to be getting a small amount in return, but that's understandable. But let's dive in. And do you need to be experienced? Yes. To trade live, absolutely. I highly recommend. Do not try to trade live unless you have at least, ideally, 6 months of. You can get by with 3, but you need time to experience ups and downs in the market. Trade on demo. Trade the same exact way that you're planning on trading live. Trade on demo first, that same exact way, for 3 to 6 months before you put real money at risk, whether that's $100 or $1 million. Trade on demo first. Always do demo trade first and then trade live. And because by the time you get around to that trading live, then you have experience in what you're doing. You're going to pay somebody for the educational experience, and usually it's the market, because you're going to learn more by doing than you are by listening and watching. But it brings us full circle if I can successfully do this. All right, we're going to present. Stop sharing that, and we're going to share this right there. Yes, I have a yes. We're going to talk today about how to trade Forex. This is my favorite of all of the markets to trade. And we're going to go into the last session of the day, which is how to create a trade plan. The first part of that is finding our market. Now, hang on. I got to do the disclaimer before we go any further. This class is intended for informational and educational purposes only, blah, blah, blah. Don't trade with money you can't afford to lose. Don't take anything I hear. This is all the U.S. regulations requirement disclaimer. So Forex is my absolute favorite. And I'll give you the strange story of how I got into Forex. Back in 2017, I started as a Christian trader, right? Godly trading, right there. I had this idea one day. Hang on, I own stock in this company. I am an owner of the company. Am I responsible to God for the way in which that company behaves? If that company does things that I believe are contrary to my faith, but I own stock in that company, I'm therefore an owner. So I had this crisis of conscience, if one might say. And this is when I discovered Forex. With Forex, you're not trading any company's stock. You're just trading money back and forth. And so I made the switch fully. By the way, I have since overcome that, because I realized, just the same way I had this epiphany of, hang on, I'm an owner of this company. I'm responsible for what the company does. As long as I'm voting, the public company, they have votes. As long as I'm voting, then I'm no more responsible for the actions of the CEO than I am responsible for the actions of the President of the United States. As long as I'm voting in the election and voting my conscience, then whatever the president decides to do is on him, not me, because I've done my part. So I'm back in trading stocks now. But I still love Forex. I love Forex. It is, we're going to get into it right now, is all the different reasons and why I love Forex. But let's just dive right in. So what is Forex? Well, it's an acronym that stands for Foreign currency exchange, Forex. Foreign exchange, foreign currency exchange. You're just simply changing one type of currency for another. If you fly through London Heathrow Airport and you're going to spend the day in London, and you've got dollar bills, US dollars in your pocket, you go over to a machine and you put those dollars in and it spits out euros or it spits out pounds. These days it spits out pounds. If you're in Paris, it'd spit out euros. If you're in Rome, it would spit out euros. That's all Forex is. Foreign currency, right? I'm in a foreign country, and to them, my dollars is foreign, and I'm exchanging it for their currency. It's just one versus the other. That's all you're doing. Understand, though, that when you trade Forex, you're always trading that exchange. You can't simply just, people say, hey, buy the dollar. You can't buy a dollar. I mean, you can. You can spend a dollar to buy a dollar, but it's just a dollar, right? When trading Forex, you're always buying one country's currency and selling another. Even at that little machine in the airport, what you're doing is you're giving it your money, you're selling your money, and you're buying out the money it's giving back to you. You're buying one and selling the other. That is Forex in a nutshell. And as a result, since I can't buy the dollar, I have to buy the dollar against something else. Forex symbols, right? The symbol for Apple is AAPL. The symbol for GE is GE. The symbol for Forex is always, what are these two countries' currencies, and then you put them together. So it's called a Forex pair because you're pairing two countries' currencies together. Now, in the arena of the euro, it's not a country; it's a group of countries. But the pound dollar, the Great British pound versus the United States dollar, it would be GBP USD. That is the symbol that you would type into your trading chart, your Forex chart, like TradingView or whatnot. So that symbol, the Euro US, let's say you're going to go long the Euro US. That means you're buying euros and you're selling dollars. If you go short the Euro US, you're buying dollars and selling euros. Every country out there has its currency. I think Venezuela. Where does Javier Milei? Where did he take over? Was it Venezuela? Was it El Salvador? I think it was Venezuela. Can't remember. Anyway, he just recently switched his country from their native currency to the US dollar. But though every country out there has a currency, and you can trade almost any pair. You can trade the US dollar against the Mexican peso. You can trade the US dollar against the Swedish kroner. You can trade the US dollar against, I forget who the real is, but anyway, there are major currencies out there that are exchanged. Much like in the stock market, you've got the majors, right? The 30 that are in the Dow Jones, and then you've got the 500 in the S&P, and you've got 100 in the Nasdaq. Well, you got some minor companies that are down there in the pink sheets and the penny stocks. The same way is true in foreign currency exchange. There are 8 major currencies, country that make up $90. The Eurozone euro, the European euro, the British pound, the Japanese yen. Those are the 4 majors. And then inside of the 4 majors are minor majors, for lack of a better term. The Swiss franc, the Australian dollar, the New Zealand dollar, the Canadian dollar. Interesting, the Swiss franc is the only one of the Euro countries that still has its own currency, right? The German mark is gone. The French franc is gone. But the Swiss, because of who they are, they kept their own currency. So these are the ones that most people in Forex trade. And you're trading, one against the other. Every one of these can be put together. Now, they're not put together in any combination. There's always one versus the other. One's first and one's second. So here are the major pairs. There are major U.S. pairs. There's 7 of them. And they're always in this order. I don't mean in this order as 7. I mean, Aussie U.S. It's never U.S. Aussie, right? You're going to hear me say Aussie and Kiwi and all that. So that's how they each have nicknames. The GBP USD, the Great Britain pound versus the United States dollar. It's always spelled that way. It's never USD GBP. Never, ever. It's always GBP USD. It's just the way it is. That one has a nickname. It's called the cable. There's a backstory there. I won't get into it. The Euro USD is called the fiber. The USD Swiss is called the Swissy. The USD CAD is called the loon. You got the Aussie US and the Kiwi US. So those are the nicknames of them. But you're going to always see these written like this. You're never going to see USD AUD ever. So they just recognize that it doesn't mean anything. It's just industry standard practice. These are the major pairs. Those are US. These are the ones that are traded the most. You have your major crosses. So of those top four, predominantly, these, Aussie yen and the Aussie is not really part of the top four countries, but it's part of the top four currencies. These are your major crosses, and these are your minor crosses. Notice that there are no dollars in here. The dollars are only in here. But you've got all your major currencies here. At least one of these has one of those four countries in it. Japan, Great Britain, or Euro. And over here, you got the crosses of the other ones. Now, sure, you absolutely can have a Mexican peso, Swedish kroner cross. The thing you run into is the volatility. There's not many people trading it, and it's all over the map. There's issue the spread. Remember I didn't get into it on the stock trading. But there's a difference between the bid and the ask price. That's going to be on stock trading number 2 or 3 on how to trade stocks. I'm not going to go into it today. I'm going to confuse a lot of you, but just understand that there are 28 overall. There are 28 Forex pairs that people trade. Which is one of the reasons I love it so much, because you're limited. You don't have to worry about the options. If you're just starting out trading stocks, you're like, oh my goodness, there are 4,000, 5,000, 6,000 stocks to pick from. How do I pick? With Forex, you get 28. And that's it. Sure, there's others, but the entire world trades those 28 and just about only those 28. And so it's default, right? You trade to all 28. So it makes it so much easier. Now, there are some language differences between trading stocks and trading Forex that you need to understand and overcome. The main one is, how do we reference? You know what? I can hit buttons, can't I? Yes, I can. Look at that. How do we reference movement in this trade? If you're trading Apple, it can go up $1. It can go up 35 cents. Apple's never going to go up 50 pounds. Apple's never going to go down 3 euros. It's denominated in dollars, so it's going to go up by dollars and cents. But we're trading the dollar versus the pound. So if it goes up this much, what do I say it's gone up by? 4 cents? 4 shillings? What? Yeah, we'll go here. So for Forex, they have invented a term. It's called the pip. Price is denominated in pips, which is either price index point or percentage in point. I think price index point is the one I have used the most. You go, why? Why is it? Because you can't use dollars or pounds or pennies or shillings, right? You've got to have something that everyone can reference to say, hey, it went up 50 pips today. So we call it a pip. Just that's difference number one. Difference number two, this one can catch out a lot of newbies in Forex, is whereas the Apple stock is at $252.38 2 days ago. Okay, I know exactly what the price is. When you're comparing these two currencies, how do I know what the price is? So all of the pairs, all 21 pairs of the 28 that are not yen, go out to 4 decimal places, 1.1301. The yen pairs go out to 2 decimal places. So you can, when you're new to it, you're going to say, okay, I'm seeing these numbers. They're not matching up. The euro yen is not the same as the euro yen. There's different numbers there. Just don't have to understand it. Don't have to figure out why. Just recognize that it is. When you're talking about the price of the euro yen, you're going to go to 2 decimal places. When you go to the price of the euro US, you're going to go to 4. And the price is going to be radically different, right? The euro yen might be 150, and the euro US might be 1. So there is an adjustment inside your brain when you're looking at a chart and looking at numbers and trying to compare it with stock. That's really the only big hurdle that you have to understand when time comes to make that switch. Let's just go through the differences between Forex and stocks. So first things first, there's no New York Stock Exchange or London Stock Exchange for Forex. For futures, there's the Chicago Mercantile, the Chicago Board of Exchange. There's no one centralized exchange because they're everywhere. All right, every airport has one. Every broker does their own, so it's decentralized. I love that fact. But that means there's no one place to go. There's no one official quote. You can pull up your screen of 4 or 5 different brokers. They might have all slightly different prices for the Euro US. You pull up the stock of Apple, the price of Apple, there's only one place to go, and there's only one price. So the market is decentralized. I love that. Another big difference. US Stock Exchange opens my time, Central, 8:30, closes at 3:30. And it's not open. There's transactions that can happen outside of it. But as far as the stock exchange is concerned, that's it. It's open and it closes and it's done for the day. Not so in Forex. Forex opens their trading week in Sydney, which is going to be, okay, I put Eastern to help out. 5 o'clock Eastern in the US is 7 a.m. Sydney, Australia time. So it opens at 5 p.m. Eastern here in the US. It doesn't close till 5 p.m. Eastern on Friday. It is open. We call it open 24/5, right? So the Forex, whereas the stock market opens and closes every day, the Forex market, it's open 24/5. There's 2 days that it's closed. And, really like 1.5 days that it's closed. There are 4 major sessions, 4 major periods where there's a lot of activity. When Sydney opens, Sydney is the hub for, like, New York and London are big hubs. Sydney is the hub. Sydney, Australia is the hub for that smaller area in the South Pacific. Then that opens at 5 o'clock my time. Then Tokyo opens about 2 hours later. And Tokyo is a big financial center. And then London opens 2 o'clock a.m. my time. And then finally New York opens. He said, what do you mean open? He said it was always open. It's never. We call it the open, but what that means is the big brokers, the big banks, the big hedge funds, that's when their traders start their trading day. Right? The market is open the entire time, but we consider the New York open at 7 a.m. Central, when in New York at 8 a.m. Their traders are finally sitting. The Goldman Sachs and Wells Fargo and the big guys are sitting down at their computers and starting their morning trading day. What this gives you, because there's overlap in it, right? So from 7 a.m. my time to 11 a.m. my time, both London and New York are open. And that is when there's the most volume, there's the most activity, there's the most opportunity for price movement and for profit. When Sydney opens, it's the only one open in the world, and there's not much going on. The other thing that, unlike stock, and we mentioned in the last session, that stocks are built, especially indices, the Dow Jones, the S&P, they're built to go up over time. Right? You're talking about one country's currency versus another country's currency. There are no years-long trends like that. I mean, the S&P has been going up every year for 50 years. You're not going to find that, because at some point it's going to come down, because these are two economies that are operating independently, and their stock price is going to fluctuate. Now, they do trend. They're not usually all over the map. They usually go in trends up and then trends down and then trends up. So they're more regular in that respect. But you're never going to see the Euro US start out at 1 and end at 5 like you would Apple stock. That's just not the way economies work. And therein was my realization. That's the reason I made the switch. Hey, I'm no longer buying Apple. I'm no longer worried about what the CEO of Apple is doing and whether he's living and making his company do things that are against my religion, my beliefs. It's just one country's currency versus another country's currency. So while Forex markets do trend more, they are not built to reasonably probably go up over time. It's not, I mean, you're never going to have the pound 5 times the dollar. You might get to 3, but historically it's going to be between 1.5 and 2. Between 1 and 2. But the biggest difference, the main difference between stocks and Forex is the size. What do I mean by size? The amount of money that's happening daily around the world in the Forex markets. For the U.S. markets, for the U.S. New York Stock Exchange, the NASDAQ, and the Amex, those 3, there's about $400 to $500 billion changing hands, transactions happening every day. It's a lot. $300 to $400 billion churning in the U.S. stock markets every day. Forex, 7.5 trillion. So it's like 1,000x larger. There's a saying here that Americans trade stocks. The rest of the world trades Forex. And you can see why. And what that does, liquidity, volume, that gives you assurance. If you're trading a penny stock, you might have bought 1,000 shares for $5, but it might go a month and no one does anything. There's just nobody out there buying it. You're never going to have that in Forex. There are millions of transactions every hour. You're not going to have near that in the U.S. stock market. That is why I love it so much. There's always volume to be had. Now, sure, when Sydney opens, there's not a lot, but there's always volume coming 2 or 3 hours later. You know that as soon as Japan opens, as soon as Tokyo opens, here comes your volume. So that is why I love it. Everyone's out there making moves. The other reason is big company like Goldman Sachs or BlackRock comes into the U.S. stock market and buys one stock. They're going to move the market by themselves because they might be 1/10 of what happens that day. BlackRock goes out on the Euro-US market. They're not moving anything. You got entire countries out there making exchanges. So one entity can't have as big of an impact and move the market in Forex like they do in stock. So here's some pros and cons of Forex versus stock. There's only 28 pairs to worry about. Every day, open up your charts. I got 28. And since you're going through the same 28, you're not really going to be churning like I mentioned in the stock session. Hey, find those 30 to 40, and always be on the lookout to maybe tweak a few here and there. There's 28 in Forex. That's it. You never add more. You never add less. So when a country goes belly up or gets absorbed by another country, 28 is it. So it makes things easier on you. You can trade real live money. You asked Mock Forums asked me, I don't know how to pronounce that. I'm sorry, I'm butchering the name. Asked me, how much do you need to trade with live? You can go in with any broker. Most brokers will allow you to trade not just mini lots, but micro lots. If you're in the US, you can open an account with a Oanda, OANDA, for $10 and trade real money. Now you're risking 50 cents to make $1. So it's a small amount of money, but you can still trade actual money, live money, with all the emotions that come with live money, with very little money. I love that. The reason I'm so passionate about trading is that it offers the most amazing opportunity for anyone in the world with access to the internet, with a phone, to change the course of their family's financial future. And it has such a low bar to entry. Anybody can trade with $5, $10. It's amazing to me. You're not going to make a lot of money at it, but you're going to make a lot of experience at it. And we're going to get to, in the next session, what to do with that experience, how to get more money from that. There are almost no opening gaps. It's an opening gap. I told the story in the last session on stocks. I had bought stock in this. I was trading this one company, and I had a stop loss in place. Well, lo and behold, the market opens up, and the price of that stock opened lower than my stop loss. It gapped, right? There's a gap between where it was yesterday and where it opened today. That happens a lot in the stock market. You have gaps, opening gaps up, opening gaps closed. In Forex, there are no gaps. I mean, there's from Friday to Sunday, that's it. But from day to day, it's constantly open, so there's no gaps to be had. So there's less worry of, as you go to sleep, I've got a trade on. I don't have to worry about a gap because it's on nonstop. If you're in the U.S., our wonderful, blessed U.S. government regulations state that unless you have $25,000 or more in your trading account, you can only do 3 day trades a week. There's no such thing. It's called pattern day trader because they think they're trying to protect us from ourselves. Yeah. That doesn't exist in Forex. That was another main reason. I can scalp. I can do whatever I want, and there's no U.S. regulation. It's not regulated. One of the pros, it does tend to trend more. The cons of it, there's no regulation. I love that. It's decentralized. There is no regulation. But if you're thinking, hey, there's no government entity out there to watch over, as a watchdog, to watch over these companies and what they're doing, you might have some hesitation about Forex because it's not regulated. There's There's nothing to regulate from a market standpoint. Now, yes, we individuals, our U.S. citizens, are regulated in what we can and can't do. There's certain things we can't do in the realm of Forex. I'm not going to get into that. Another thing is you've got worldwide economic news that affects prices. Case in point, I was one time I was in a trade of the Swiss yen. So Switzerland and Japan. The U.S. had the Fed announced an interest rate change. I don't remember if it was up or down. Naturally, all of the U.S. pairs, the Euro U.S., the Pound U.S., went nuts. My Swiss yen trade went nuts. What in the world does the Federal Reserve overnight interest rate that it charges U.S. banks have to do with the exchange rate between Japan and Switzerland? I don't know, but it does. So just understand that there's always economic news out there. There's always something happening somewhere in the world, and you need to be aware of it depending on your time frame, especially if you're trading a smaller time frame. Things like the GDP and the retail sales, the petroleum level, things that don't affect stocks do affect Forex. It's not as well known in the U.S. Another downside, a lot of people don't know the beauty of Forex here in the U.S. And there's a thing called overnight swap plays, because when you're trading Forex, you're always trading on leverage. You're always trading on borrowed money. And as a result, depending on the exchange rate between those two currencies, you can be charged an overnight interest fee. Now, it might be 3 cents, but there's still a swap fee to be considered carrying that trade past the time of the 5 o'clock for whoever your broker is. But those are all just minor details. The good news, the fantastic news, is that I'm making this big because this is important. That's the opposite of big. Trading is trading. What do I mean by that? I'll face that. Your stock strategy is the same as your Forex strategy, by and large. Yes, test them out. Make sure they're going to work together. But when you're just looking at a chart and thinking this price is going to go up or down, and when it goes up and down, can I predict where it's going to go next? If it's stock, if I showed you a chart, it could be stock, it could be Forex, it could be futures. Trading is trading. And the mental mindset that everybody needs to develop, the tools of your strategy that everyone needs to develop are universal. They're ubiquitous. Anyone can trade any market. So we mentioned in the last session, I'm going to go over it quickly in this session for those of you who were with us last time. How do you be a successful Forex trader? It starts with define success first. Your success in Forex is going to be determined by what kind of mindset, what kind of discipline are you bringing to the table? First and foremost, above and beyond everything else, please work on, this is why you need to trade on demo. Because what you're trying to do, you're trying to quiet those voices in your head. So many times that say, click, click, come on now, click, 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 click. So many times I have entered trades. It was like my hand was on its own. It was doing a thing and I wasn't in control of it. Just, oh, I'm in a trade. You've got to learn discipline. First and foremost, before you trade anything, any market, any time frame, learn the discipline. That's why you need to trade on demo, so there's no money at risk. Or another thing I would say when it comes to trading on demo, if you feel like this is just too much like a video game, I can't feel invested in it, trade with 1 day's pay. Whatever job you have, never risk more when you're in those first 6 months. Never put any more in your trading account than you make in 1 day. That's 20% of a week's paycheck is the max that you should be putting. Now you can do that, and then you're going to get those sweat running down your back, and you're going to get those you get all those emotions because hey, that's Monday's paycheck. I worked 8 hours for that, but you're not going to ruin yourself. So if you need to trade real money, never trade when you're just learning. Never trade more than 1 day's pay, whatever that 1 day's pay means to you. Once you get over the hump, once you become a successful trader in your head, I need y'all to hear me here. Defining success first is the most important thing you can ever do, because you need to know the criteria for your own sake. Don't drown out the noise. Don't listen to anybody else's definition of success. Don't let anyone else tell you what it means to be a successful trader. If you have $100 in your trading account and you made $20 last year, you might be thinking, and someone asks, hey, how much money did you make in the market? I made $20. Oh, wow. Gee, you're going to go buy a hamburger with that? They're going to make you feel like this big because you made $20. In reality, you made 20%. And there are people out there with millions of dollars going, oh, hang on, he made 20% last year? Heck yeah, let me give him my money. Define success first and only listen to that voice in your head that says, I am a successful trader when I get to that point. And when you get to that point, go ahead and stamp your brain with successful trader. Don't worry about what your balance in your account is. If you get to the point where you can open your charts, you can trade your chart, you can close your chart and go about your day, you can be successful month after month after month, improving your return, regardless if it's 25 cents a month. You are a successful trader. Don't let anyone else tell you differently. So going back to the success formula, discipline is the key. Define success, develop your discipline, and then apply whatever capital you have, whether it's $10 or $0. Apply it to that strategy and then let time do its amazing thing. And let your dog knock your camera off its axis. There we go. That's the most important thing. All right, so as with stocks, what do you need? I just mentioned mindset and capital. What kind of tech do we need? Same thing as with stocks. You need something to access the internet. You can absolutely trade Forex on your phone. It's not as easy because there's some of the better platforms. MT5 is one of the best platforms for Forex. You don't really have a lot of options on your phone. Really, to be the best at it, you need a laptop, but that doesn't mean you cannot trade it on your phone. You absolutely can trade it on your phone. Software, TradingView is still ubiquitous. Anyone can open up a free account on TradingView and trade all they need to trade. And it's the same chart, whether you open up it on your laptop or your brother's desktop or borrow a tablet on the next cruise, right? It's the same. I love TradingView for that reason. TradeStation there, MT5 is my favorite. And then again, your broker, Awanda. I highly recommend Awanda to anybody in the U.S. It's the best place to start. They have their own charting software. It's fantastic. Again, you can trade with 5 cents. In a broker, here are some good ones. IG is the big boy in the entire world. They're the biggest ones out there. Awanda is here in the U.S. If you can get IG, get IG. Awanda's here in the U.S. Here's some other ones. Pepperstone, Interactive Brokers, if you can see behind my face here, Interactive Brokers. But I would recommend either IG or Awanda for now when you're just starting out. So, what do you need to trade next? You need a strategy. Good news. Trading is trading, and all of the same strategies that we applied in stock can be applied to Forex. I said list of stocks. Clearly, I didn't edit this slide. You need a list of Forex pairs. Good news. It's already been set for you. Remember, there's a world of difference between being a trader and investor. We're going to talk about trading here. Now, these are going to be the same slides as we showed in stock. So if you're brand new, I'm going to show you the basics of trading, Forex. If you were in the stock session, this is going to be a slight repeat. So because trading is trading. As with stocks, as with options and bonds and futures, there's only 3 ways a market can move: up, down, and sideways. Imagine this was Euro US and not Apple, or not the S&P 500. You've got a long uptrend, you got a downtrend, you got a sideways no trend. Because you've got those 3 different directions, you've got 3 different strategies: trend, counter trend, and range. I highly recommend, more so than in stock, I highly recommend trend trading as a Forex trader. I highly recommend, if you're going to start trading Forex, start on the daily chart and trade the trend. It is the safest, easiest, quickest way for you to learn and become successful. Daily chart trend trading. You can go counter trend. It is less successful from a wins and losses standpoint. You can make all the money you want. You can be a highly lucrative, highly wealthy, making lots of money at counter trend trading. But from a wins and losses standpoint, you might have a 60, 70, 80% win rate with trend trading. You might have a 30, 40, 50% win rate with counter trend trading. Doesn't mean you can't make money at it. You just got to develop that. And you got your range trading to sell. And again, range trading, the argument can be made that range trading is just counter trend trading. I am a trend trader. I trade Forex on the daily chart. I open my platform every day at 3:30 my time, because my broker shuts its door. My broker shuts down for an hour from 4 to 5 my time. So I open my platform at 3:30 every day, and it takes me 5 minutes to go through my charts. If I'm trading a lot, if I have a lot of trades to enter, it might take me 15 minutes total. But in general, between 5 and 10 minutes is how much I trade every day. I trend trade the daily chart, and it's fantastic. And I go about my day doing other things. I'm going to go over these 3 trend strategies again. I keep saying again. Some of you are probably in the stock session. This is going to be a repeat. Our 3 friends, Frank, Forrest, and Bob, they are the 3 ways to get into a trend. Right? Think about this. You're at a train station, and you're waiting for the train. You're going to go to wherever. Well, you can get on the train when it's sitting there. You can get on the train when it has just barely started moving, or it's moving at a walking pace. It's safe to get on. Or you can get on the train if it goes on there and for whatever reason stops and backs up some, and then you can get on. But once that train is moving, don't jump on. Just wait for the next one. Same thing with the trend. You can get on a trend when it's dead stopped. In other words, when it's sideways. You can get on a trend when it's just barely getting going again, when it was sideways and now it's starting to pick up again. Or you can get on a trend when it backs up, when it's going up and it pulls back a little bit, like that train backing up. But if that trend is just going every day up and up and up and up and up and up, don't get on. Just go to another pair, wait for something to be stopped. Don't jump on a moving train. Don't jump into a moving trend. Wait for that trend to have some reaction that causes you to be able to get in. And that's what Frank, Forrest, and Bob do. Frank and Forrest wait for pullbacks. Bob waits for that train, that trend to be going. Now, my analogy kind of going to fall apart here in a minute. So let's zoom into this. Doesn't matter what this is. Let's call this a Euro US or the pound yen. So Forrest says, hey, I'm going to wait for price to pull back to a moving average first before I get in. So that is, the train has left the station and it backed up some. Hey, I can get on now. I thought that this trend was going to leave without me, but hey, this trend has backed up some. What's the downside here? Well, it might keep going down after you jump on. Hey, why is this train backing up all the way to the next station? I wanted it to just to back up and pick up me. Every one of us wants to wait, and as soon as we get in, we want that pullback to end immediately and head up. That's what all of us want to do. Frank waits for the train to back up, stop, and then start rolling ahead a little bit. Frank waits for one candle of confirmation that trend is going to start going again. I'm not going into details of why I called him this. This is just dead simple. You can figure it out. Bob's slightly athletic despite his pudginess. Bob waits for that train to be going forward again at the maximum speed that he can possibly jump on safely. Bob waits for confirmation. Okay, I saw the trend was going up and the trend pulled back. I could have gotten in then, but I didn't want to. I wanted to wait for the pullback to be over with. Okay, we have that one candle. Frank said, hey, there's one candle. Bob said, okay, I'm going to wait for more than one candle. Price is approaching where it was before the pullback. Bob said, okay, fantastic. And then price puts in one extra candle of upward movement. And Bob's like, fantastic. I now have confirmation that this train is going where I want it to go. This trend is back on track. And let me jump on this now. So those are the 3 different spots where you can get into a trend. When it's pulled back, when it's pulling back, when it has pulled back and you think it's heading back in the right direction, or after it's picked up some steam and you feel more confident. This is all trade-off between risk, good price, and confirmation. So that's just what I talked about. With Forrest, with the pullback, you're getting into your best price. With Frank, you're getting in at a slightly better price, or you're getting a better price than Bob. Not as good of a price as Frank, as Forrest, but you're getting a little bit of confirmation. So Frank is kind of the middle ground. All right, I've gotten a good price I'm happy with, and I've gotten at least one candle of confirmation. And then Bob is like, okay, I'm giving up price, but I'm getting confirmation out of it. The downside is with all of them, you could be wrong. But that's a downside in any strategy. You could always be wrong. I have a 60% win rate in the strategy. Let me be emphatic here. The strategy I trade every day, and it's a free strategy. Anyone can trade it. I have the indicators and everything, all the information available for free. Happy to give it out. A little more complicated than Frank and Forrest and Bob. What was I saying? About the strategy and giving up and trading up. This happens to me a lot. I'll say, well, where was I? What was I doing? Confirmation. So my strategy waits for confirmation before I get into a trade. And I understand that, and I'm happy with it. I have tested it, and I know win rate. So my strategy back tested and forward tested to about a 60% win rate. That means 6 out of 10 trades I'm winning. Well, if I do my math right, that means I'm losing 4 out of 10. You're always going to have losing trades. So Frank, Forrest, Bob, they're always going to have losses. You get into a Forrest trade, all right, it's on a pullback. This is a likely place for that pullback to stop. Get in now. Oh dear, that pullback didn't stop. It's still going down. You're wrong. You're going to be wrong. I'm wrong 4 times out of 10. I'm wrong 40% of the time. Praise God, I'm right 60% of the time, and that's where I make my money. So the downside to trading is that you're going to be wrong sometimes. Look, there are people out there who make lots and lots of money with a 30% win rate. That would drive me insane. I could never, I don't say never. I wouldn't want to have a strategy with a 30% win rate that made me 20% a year. You're like, what? 20% a year? I'd give up any kind of sleepless nights for that. You do you. So the downside to these strategies is, hey, you could be wrong, and you're going to be wrong. Like I said, Forrest, you get in on a pullback, the pullback can turn into a downtrend. With Frank, you can have a false resumption. And with Forrest, with Bob, these names, you can have a false breakout. Now, Bob has the least amount of risk because, generally speaking, there's a famous chart pattern. We're going to get into chart patterns probably in episode 3 or 4 of these lessons, called cup and handle, where price goes up, it comes down, goes up again, has a little bit of a dip, and then takes off. Up and down, down a little bit, and then up. So when price is going sideways, generally speaking, that first breakout is a good 50-50 that it's going to fail. So you put your stop loss accordingly. But by and large, that initial breakout is not going to turn into a downtrend. You're not going to be wrong on the overall direction. So Bob has the least amount of risk, and you give up a better price for that confirmation. So there's your strategy. So lastly, you need a list of stocks because you forgot to change the slide. You need a list of Forex pairs. Good news. There's only 28. That's all there is to it. You want to trade the Mexican peso or the Swedish kroner, go right at it. That's $7.5 trillion of global trade. Probably 7 trillion of it are the 28. And all of the other countries make up the rest. So the major benefits to Forex over stocks, which is why I trade it, the limited amount of charts to go through every day, the fact that it doesn't close day to day, so you're never going to have gaps. There's an assurance, a restful assurance in that. The fact, primarily, this is what got me into it in the first place. I can have a live trading account with $10, and I can trade my own money every single day with $10. And yes, fine, I'm making 25 cents per trade, but I'm still making money, making real, actual money off of $10. Can't do that with, well, you might do that with Robinhood, but you're not doing that with Charles Schwab. You're not doing that with E-Trade. And then the fact that as a trend trader, Forex pairs are more likely to trend than stock. You say, well, hang on, stocks trend. Stocks spike and then go flat, and spike and go flat. And maybe they climb, but they're going to have these bigger spikes. Whereas because you're dealing with giant economies, there's not a lot of spiking. It's either going to be up or going to be going down or going to be going sideways, but you're not going to have, it's not going to be erratic. So I love Forex. Yes, I trade stocks. I trade options. I trade income ETF. I don't trade. I invest in income ETFs. But Forex is my bread and butter. It's what I love the most. But for U.S. traders, Forex is the most unknown. It's an unknown quantity. So that is it for how to trade Forex. Does anyone have any questions? And by the way, if you're on this live stream, I've got 3 more hours to go. If you want to drop a question in here from something that happened 2 sessions ago, I got a problem with that. I'll answer that question now or later, depending on when you ask it. Just to show you what's happening now. Where is that? And we're going to go. So the next session is going to be changing gears slightly from the how to trade to how to trade. how to find money, how to make money specifically for the purpose of putting it into your trading account. Some this is not trading related at all. This is side business, side income, primary income, whatever you want to call it. Ways, and again, mindset is the key here. Ways that you can fund your trading account. And then that leads directly into 1 o'clock Darwinex. It's a specific company that I highly recommend to everybody, that you can take this little amount of money you're making every month, give it to Darwinex, and suddenly, boom, you got $100,000 account to trade with. Real money. Not real money. We'll get into it at 1 o'clock. And then lastly, the last one of the day, the most important one of the day, and this one is for beginners, intermediate, advanced, anybody who is struggling with, I don't know how to trade, I'm miserable at trading, something's missing, something's not going right. How to create a trade plan. The name does not at all encapsulate what I'm going to be going over. Yes, the end result at the end of 7 lessons is creating a trade plan. But it's starting with, what are you doing? What are you trying to do? Let's take a step back. You need a trade plan. You got a trade plan, you don't like it. So if you haven't been to any of them, I highly recommend everybody show up at 2 o'clock. 2 o'clock. 2 o'clock. How to create that trade plan. That's it for right now. The next one up is going to be how to fund your trading account. I'm going to put up the slide for stop presenting for our wait period, and I will be back in 15 minutes. All right, I'm going to start up again just a little early because I've had a couple of questions. Um, by the way, this session is going to be answering this question. What ways do you recommend for one to raise funds and start trading? That's what this next session is all about. But I had these two questions popped in. What is a stop loss? How do we use one? How can we find it? And can you use it on trend trading? So whenever one enters a trade or plans a trade or whatever, whenever you have a trade to do, there are always three key pieces of information that everyone must have. That is your entry price, your take profit price, and your stop loss price. What that means is, where do I want to get into this trade? Where do I get out if I'm right? That's your take profit. And where do I get out if I'm wrong? That's your stop loss. And that's what tells you how big of a trade to take. I want to risk 1% of my account for this trade. Thank you to my dog for hitting the camera again. So the stop loss, every broker has it. Every single broker that you can trade has a stop loss and a take profit. You tell it where you want to get in, where you want to get out for your take profit, where you want to get out for your stop loss. Don't trade without a stop loss. It's not there to protect the trade. It's there to protect your account. So everybody has it, and we'll get into the details of actual trade execution in both stock, option, and forex episodes, like lessons like 3 or so. We'll get into the actual mechanics of the clickety. How do I trade this thing? How do I tell it where to get in and where to get out? Those kind of things. But yes, stop losses are always out there. Never trade without a stop loss. That is the number one key of risk management. Have a stop loss all the time. All right, let me pull up what the list of what we're doing today, and we are at the halfway point. For those of you who have been with me this whole time, thank you very much. I appreciate it. So we're going to be on how to fund your trading account, and we're starting that today. Starting that right now. We're dead on time, so thank you for being here. Let me put this over here and start the slideshow. Oh, hang on, wrong button. Let me put the slideshow with presenter view. There we go. And let me also put over there this and put over there this. I know you can't see any of what I'm doing. That's all right. So back to me, and then we're going to share. Sharing the right thing? Yes, I am. Fantastic. All right. So where is that presenter view? Oh, there it is. All right. So back to the beginning. There we go. How to trade, how to fund my trading account. That's what we're talking about today. Why are we talking about this? Let's say you love the idea of trading. Let's say you used to trade. For whatever reason, you're not trading now, or you're starting for the first time. You're like, I just don't have any money to trade with. I have been there myself. In some ways, I am still there. I'll explain that in a minute. What do you do if you don't have enough money to trade with? The answer, first and foremost, is trade on demo, regardless of how much money you have. If you are new to trading as a whole, if you are new to trading this market, if you are new to trading this strategy, trade on demo for 3 to 6 months. You got $1 million in the bank, trade on demo for 3 to 6 months on that brand new strategy, on that brand new market. Maybe you've always traded stocks and now you're trading futures. Trade on demo. You can be a billionaire. Trade on demo. Step number 1, trade on demo. But okay, I want to actually make money. To make money, you need money in the account. And that's what we're going to talk about today. How do I fund my trading account? Maybe you're somebody who is stuck at home. You can't get out. Maybe you're disabled for whatever reason. Maybe you've gotten fired from your last 5 jobs and no one will hire you. Maybe you live in an area, there's not a lot of economic opportunity and you can't find a job. However you got here, you're at the point of, I want to trade, but I don't have any money in the account. How do I get there? I'm going to show you some ways to make a small amount of money on the side, and then how to take that small amount of money and turn it into a large amount of money, which leads us into our next session. So how to fund your trading account. Step 1 is find my, oh, excuse me, my controls went away. There we go. Every one of you can say, yeah, I want to make money on the side. I want to make money. I want to make money, but I don't want to sell anything. Okay. This is why mindset is so critical. We have to overcome. I myself have undo a lot of the hangups, the mental blocks, the assumptions that I had about the world the last 50 years. I didn't even know were there. And one of the things that I've learned about is that, sales. I don't want to sell stuff. I don't want to be that guy, folks. All income comes from sales. All right, this is all there is to it. All right, every dollar that is made in this world by anybody comes from sales. Wait, what? I make stuff. I work on the road crew, right? I cut down trees for a living. I'm a plumber, right? What are you talking about? You are always selling. You're selling your time, right? Think about it. If you have a job, you are selling your time to your employer in exchange for money. That's sales. That's all it is. You're selling your product. Hey, I make bricks. I make forks. I sell those. You're selling your service. I'm a plumber. I sell my, or you're selling someone else's product or someone else's service. Hey, I've got this. I'm selling cars, right? Somebody else made it, and I'm selling that car. Or I've got a cleaning business that I'm selling that franchises for. But again, it goes back to the job. If you're working at McDonald's, your income comes from the sale of your time to McDonald's. They're your buyer. They're not your employer. They're your customer. They have bought your time. And it's an idea that we have to wrap our brains around, that every single person is an entrepreneur. And most people have one customer, which is their boss, but you're just selling your time to your employer. So, yeah, I know. We don't want to sell stuff. That's all anyone ever does. That's how economy works. You sell stuff. So, I have 4 ideas I'm going to show you today. And these are the ideas I have now. I am constantly on the lookout for you guys, especially you guys who are in my trading group. Let me pop the photo up of it. If you need a community to join, go to facebook.com/group/godly trading, or go to Facebook and do a search for Godly Trading Group. Free for anyone to join. Absolutely free. And I'm on a mission to help the people, especially in that group, find the money to trade with. My passion is to help people trade. I've had so many people say, hey, I want to trade, but I have no money. I live in an area where there's no jobs. I can't get a job, whatever it is. So, okay, I have developed this side research project, for lack of a better term, to help those people. And I'm constantly on the lookout for ways. So I have joined this. Nope, that's not it. I've joined several of these type of Facebook groups, and I'm constantly searching. And I'm experimenting with all of these myself. What are the ways that people make money on the side? Let me make sure they're real. Maybe make sure they're not. So I'm verifying that they work, and I'm verifying that they are not scams. And once I am confident in that, then I tell you about it, and then you can use those to go out and make money. All right, enough of that. Let's jump into them. So social media is the first way I would recommend anybody make money online. Okay, what are you talking about? All right, let me just show you. Oh dear. Okay, hit the wrong button. Let me just show you what I'm talking about. So this is social media right now, right? Social media just boils down to this, and it's most simple. What do you know and what do you like? All day long, I have been trying to pull down these concepts, options, stocks, into their most simple format. Options, there's only 2, a call and a put. Stocks, there's only 3 directions, up, down, and sideways. Social media, how do you make money on social media? What do you know and what do you like? Hey man, I love football. I don't know much about it. Not gonna make money there. I know a lot about laying brick, and man, do I hate it. Not gonna make money there. What do you know and what do you like? And right between those 2, that is your content. And that is where you can make money. How in the world am I going to make money on social media? Glad you asked. We watch these people every single night. I kid you not, every single night. Their name is ParaDJ. They have a channel on cruising on YouTube. They started in 2015 or so, just simply recording videos of the cruises they went on vacation because they had other jobs. And they're fantastic. And we loved it. And then the more videos they did, they started making some money. I said, okay, people are asking me, hey, where did I get that backpack? Where did I get that swimsuit? Where did I get that clock? So they went to Amazon and signed up to be an Amazon affiliate. And now when they're doing videos, they're like, okay, if you want this thing that I've been using on the cruise, go here. And Amazon gives them a cut. And so 2016 goes around, 2017, they start putting out more videos. They're going on more cruises. Now suddenly they're making more money. Now, fast forward 2024, they had both quit their jobs and they both cruise for a living because they are YouTubing for a living, making money both from YouTube itself and from Amazon. Okay, yeah, I've heard this, but how do I accomplish this? YouTube and Amazon affiliate marketing cost you nothing. All of these ideas I'm going to do today, we're going to start out from the standpoint of you don't have any money to trade with, therefore you don't have any money to start a business. So how can we make money? How can we start a business with no money? If you have a phone, if you're watching this today, you have access to the internet. You have a brain because you're able to comprehend what I'm saying, and you probably have a mouth. That means you can absolutely start a YouTube channel. You can sign up to be an Amazon affiliate, and you can, it's $0 to get started. As far as the initial education, there's almost none, because remember, what are you after? What do you know? And what do you like? You are going to bring your own set of passion to the things that you know. I hope that my passion for trading has come out these last 3 hours, and that you are getting that I am passionate about that. I know about trading, and I'm passionate about trading. I love it. Therefore, this is the area, that circle, that's my content, and that's where the money is made. If you want to make YouTube videos, but like, I don't want to be on camera. There's ways around that. Right? Yes, there are some upgrade options for very little money. In some cases, for no money. Okay, let me just, I'm dancing around the issue. There's nothing wrong with getting on camera, taking your phone, recording a video, uploading it to YouTube, signing up for Amazon affiliate marketing, and making money that way. Anyone can do that. Everyone should do that. Every single person has their own unique experience they can bring to YouTube. You think, oh, there's too many YouTube channels. YouTube is constantly growing. If you don't want to be on camera, there's ways around that. There's what's called the faceless, where you just have images and you're voicing it over. You don't want that. InVideo. Go to InVideo and type in your script, and it will create the video for you. I kid you not, from beginning to end, using stock footage videos and an AI voice that you can't tell is an AI voice. I'm not very good at typing. Okay, fantastic. Go to ChatGPT, tell it what you want. Tell it to create a YouTube video. Tell it to create a script for a YouTube video for InVideo to use, and it will do it. You literally can go to, right now, ChatGPT, give me a script for 5 minutes for how to change the tire in my car. Make that script such that InVideo can make me video from that. Take that script, put it in video. InVideo makes you can sign up for a free account. Now it's going to have watermarks and it's going to have limits on the length of the video. And you bring that back over to YouTube, and you've got an affiliate link for Goodyear tires in there. And anytime someone watches that video, think, oh my goodness, how fantastic is that? Let me go buy a Goodyear tire. Then you get a part of that money. Anyway, I don't know anything. Everyone knows something. I told this to my pastor, who is, I'm trying desperately to get him to start a channel, a YouTube channel. He's like, I don't know anything, and no one wants to listen to me. There's a great quote from Myron Golden. We all undervalue what we know because we're the ones that know it. I was telling my pastor buddy who loves his chainsaw, he loves cutting down trees as a hobby. He just loves cutting trees with his chainsaw. I said, do you remember the first time you ever tried to sharpen that chainsaw? Yeah, of course. Anyone who's ever tried to sharpen a chainsaw remembers their first time. He's like, yes, it's enough to drive this preacher to drink, right? So imagine there's somebody out there who knows how to sharpen a chainsaw. It's like, no one wants to watch a video of me sharpening a chainsaw. I've been sharpening a chainsaw for 50 years. So big deal. Everyone wants to. Anybody who ever needed to sharpen a chainsaw wants to go and learn how to sharpen a chainsaw. Why am I talking about chainsaws? You may think you don't know anything. I assure you, you do know something. Find the thing that you know and love and just start talking about it. You don't have to start selling things immediately, but eventually you're going to find some way, eventually Amazon is going to sell something related to what you're talking about. Sign up for the Amazon link and start selling stuff. So I mentioned at the beginning of this session that I am on a mission to help you guys out. And in so doing, I'm going to test all of these things out myself. So here is my brand new YouTube channel with 0 videos in it. It's called Cruise Gadgets. Why am I doing this? So we're going on a cruise on Sunday, 2-week cruise. And while I'm on that cruise, I'm going to take all of the things that we have bought to enable us to cruise. Like I get deathly seasick. I have this little watch that goes right here and sends an electrical impulse into my wrist. It keeps me from getting seasick. That's the first video I'm going to put out. And I'm going to do this. I'm going to do this live for everyone. I'm going to demonstrate to you how you can make money on social media using Amazon affiliate links, selling someone else's product, completely free to you. YouTube charges you nothing. The phone that you're watching this video on is already paid for, or you're already paying for it. It's not going to cost you anything extra. Or the laptop. All you need is an internet connection, something with a camera, which if you have a phone, you have a camera, and information in your head. So I'm going to prove this strategy. I've already told you that it will work, right? These people, where's my slides at? These people here literally quit their jobs to sell stuff on Amazon and make YouTube videos for a living. Starting off with just doing it on the side, became their full-time job. That is an amazing success story. And there's so many like that. What's next? Again, there's Cruise Gadgets. I'm doing that for you. This one is a brand new opportunity that there's nobody else with this opportunity but me and my buddy in Britain, because he invented it. It's called Local Business Service. I'm calling my version of it Review Shield, Business Review Shield. What is this? This is a way to help your local small businesses improve their business. You're going to help them get more positive reviews and fewer negative reviews and help their overall customer service, their overall customer retention, make them a better company in the process. Reviews are something that especially small businesses don't have time to deal with yet. Reviews can make or break a small business. This entire idea came from a problem, as most great ideas do. My buddy over in England had a fishing store. And they went on, opened the doors first time. And like a month later, he got his very first review ever. And it was a 1-star review. And that 1-star review said, "This new fishing store is a scam. Don't spend your money there." He's like, oh, what? I mean, he put his heart and soul and all of his money into this store. And this first review is some nut job who said it was terrible. How does he overcome that? Right? You can't erase those reviews. So he came up with this idea years and years later, thinking back about that. And the overall premise is this. We'll get to the slide. I'll go back here. The overall premise is this. You help businesses get more positive reviews and fewer negative reviews by showing them how they can take on board the review process themselves. And I say themselves, you are the ones doing it as a service. When someone comes along and gives a positive review, it lets that review out into the world. When someone comes along and gives a negative review, that goes straight to the business first. And then the business can respond, reflect, help that customer out. And it keeps that review from getting out into the world. Now, sure, that person can go around this process and go straight to Google. We're not trying to trick anybody or scam anybody. It's a brand new way of helping businesses manage their reviews, which are overlooked yet critical element for small businesses. And if you don't have small businesses in your area, stick with me. I'm going to show you the way around that as well. So again, for you who are watching this right now, there's absolutely no cost. And I said the initial education is very small. 5 minutes. I can show you how to do this in 5 minutes, literally. The sales pitch, for lack of a better term, is 30 seconds. You earn immediately off of this. And there are upgrade options. Get into the details here. Let me show you an example. This is our local farm store, our local produce store that grows stuff locally and sells it locally. What you do is you set up a website. I say we can do it on your own if you want to. That's the upgrade option. I'll show you in a minute. We set up a website for them, generates their own QR code. And what you have to convince the person watching this right now. You go to any store, any business, wherever, and you say, I've got a way that can help you get more positive reviews and fewer negative reviews and help your overall customer retention. Would that be worth a 5-minute conversation to you? They're going to say yes. Of course, they're going to say yes. So the first thing you do is, all right, every night when I'm at home, I'm off of work. I'm on my computer for a half an hour every day or a half an hour a week. And I look on my phone or I look on my laptop and I go to the review sites and I go to these places that I already know. Bob's Donuts that I go past every single day. Bob's Plumbing that I've used a couple times. Bob's Auto Repair. Bob's Florist. Bob's got a lot of businesses. And I look at their reviews. And if they've got a couple of negative ones, or even worse, if they've got 1 or 2 5-star reviews and they think that they're 10 feet tall and bulletproof, they're like, all it takes is one negative review to sink you. You go to them and say, I've got a way to solve your problem. Would it be worth a 5-minute conversation? And then here's what you tell them in that 5-minute conversation. Hey, look, here's what you do to solve your review problem. First things first, you put this QR code everywhere. You put it at your point of sale, at your cash register. You put it on your emails. You put it on your flyers, your posters, everywhere that says, hey, please leave us a review. Person scans the QR code or types in the email, the website address, or clicks on the link, takes them to a page. This page. This is a page that lives on our server. That's, businessreviewshield.com/the farm store. That's where the customer goes. And it says, please leave us a review. If they click on 1, 2, or 3, meaning it's going to be a negative review, takes them to this page and says, we're so sorry. We didn't live up to your expectations. Please tell us why. And this is what the person really wants. They normally would have been going out to Google or Yelp and just venting all of their frustrations out on the keyboard. This place is a scam. I hate this place. Don't spend your money here. But you've given them a shortcut. They go here. This is your own site, their own site, our site. And they get all their frustrations out on this. And it sends directly to the company. It doesn't go to Google, doesn't go to YouTube, doesn't go to Yelp or whatever. It goes straight to the company. And that person then has the opportunity to say, hey, we failed. Let's reach out to that customer. Let's make it right. But this negative review, once they have gotten it out of their system, they're very unlikely to then type in google.com and go to the reviews and leave you another. Maybe they would. We're not trying to prevent anyone from doing anything. We're trying to help them, first and foremost. If they left a positive review, if they had left a 4 or 5-star review, it takes them to this page. It says, thank you. I'm so glad we met your expectations today. Hey, where would you like to leave your review? Would you like to leave it with Google or Yelp or Trustpilot? While we're at it, here's a coupon for being such a valued customer. And that's it. That is the beauty of the whole system. And you charge that customer $97 a month. We charge that customer $97 a month. Whoever is hosting the website does that. Now, how does this help you fund your trading account? I'm going to get to it in the next session. For $43 a month, I can show you how you can have a $100,000 trading account. $43 a month, $100,000 trading account. Simple, straightforward, up and up. That's where I'm making my money. How do I make $43 a month? I don't have $43 a month. If you sign up one person to Business Review Shield, one business, we split that 97, 50-50. That means one customer. All you need is one customer, and you make $48.50 a month, and your $100,000 trading account is funded for as long as that person's a customer. Imagine if you did 2 customers, 5 customers, 10 customers. Do you see that? And all it starts with, no money on your part, very little time on your part. Find a business that is in your area and reach out to them. Swing by there on your way home from work and talk to them. Call them up on the phone and ask the person on the phone, hey, I'd like to discuss a review. That 15-year-old kid who answered the phone is that they're going to immediately hand you off to the owner. Email them. Okay, well, I don't have any businesses in my area, or all the businesses in my area have 5,000 5-star reviews. No one needs. Okay, look for small businesses online. I am a online only small business myself. Go to Trustpilot, go to Google, and just search negative reviews. Find companies online that have gotten negative reviews on Google, on Trustpilot, on Yelp, and send them an email. Same exact pitch. I've got a simple way for you to get fewer negative reviews and more positive reviews and improve your overall customer retention. Would you like to know more? Just start sending out emails every day. All it takes is one conversation. I mean, look, once you actually get someone on the phone or in person, they're not going to say no for $97 a month to take this entire headache off their plate. So for one conversation is going to equal a $100,000 trading account. I know it seems too good to be true. It's not. It's dead simple. Now, what's the upgrade option from this? For this situation I'm talking about, you're basically our affiliate. We pay you, we split that $97 a month profit 50-50. If you want to do the whole thing yourself, you would need to pay for the things that we're paying for now, right? The $97 a month that we pay for our ClickFunnels account, which is what runs this, and then the license for this software, my buddy, is like $47 a month. But then you're keeping the full 97. So for this scenario, you need 2 customers. 2 customers and you fully break even. All your expenses plus your trading account. And then any customers you get after that is $97 a month. But if you don't want to deal with the computer, the coding, the back and forth customer service, if you just want to find someone and sign them up, we'll give you $48.50 a month per customer. That's as easy and low cost as I can make it. Except for this one. You could be an affiliate of us. Like, hang on, what are you talking about here? This one's not going to make you as much money. But we have 2 products for sale right now. We'll have more later on. But for now, we have 2 products. We've got our monthly Godly Trading Pro membership and my book. I sell this book for $20. If you sell my book, I'll give you $10. How's that for a 50-50 split? All right. Sell this book to anybody and everybody, and you get $10 for every book you sell. Sign someone up for the $37 a month subscription to Godly Trading Pro, and you'll get $10 every month for that subscriber. Now, if you're wanting to get the program yourself, we don't wait for you to get 3.7 customers. If you get 3 customers signed up, you get your own personal account for free. But so here's another one. No money, no cost to you. Sell our stuff. I said at the very beginning, right? All income is sales. You're selling your own time, your own product, or your own service, or you're selling someone else's time, product, or service. Well, in this case, you can sell my product and you can sell my service, and I will pay you every single month for that. So that one's dead simple. Lastly, there's e-commerce. Now, this one is going to be the most training involved, but this goes back to, and I'll put this one last for a reason. It goes back to the question that the formula from the beginning for the social media. What do you know and what do you like? I haven't gone into a rant about it, but I love cruising. Absolutely love cruising. I could talk all day long about cruising. I have not yet found a way to sell cruises, but I know a lot about cruising, and I love cruising. And I am going to make content about cruising. Now, if I could manufacture cruise stuff, I would, and there's my e-commerce product. Everybody out there has a thing they love, and everybody out there has a thing that they know really well. And there's a product out there in the overlap of those 2 things. And that is what you can use to make money online. Now, this one's going to require a little bit of technical knowledge. Well, I'll put this one last. The tools that you learn from the first 3 are going to help you here. So don't try this one first. Try this one last. And again, I say last. Every single month, I'm going to be coming back to you with new ideas for how to fund that trading account. Very small initial cost. Very small learning curve to overcome. And pretty short time to make your money back. You can sell your own products. You can sell other products. You don't even have to buy the product. Like if you sell this book for me, you never have to touch the book. You tell me, and I send it to the customer, and you get the money. It's called drop shipping. Same process. And I'm going to be, as with the social media, as with the affiliate marketing, I'm going to be doing this myself to show you how it is done. So, and again, the knowledge flow that you learn, the knowledge you learn from both YouTube and the Business Review Shield, and honestly, being a Godly Trading affiliate, they're going to help you with this last one. I left the income investing on there. We're not going to touch it today, and I'm going to talk about that one today. So, it's a lot. I know it's a lot. I would highly recommend, of these, the easiest one for you to start with, the easiest way for you to fund that trading account is with Business Review Shield. Get on your phone tonight and go to Google Maps, center it on your house, and look at all the businesses around you. Go to every single one of their reviews, and then simply make a decision to contact those businesses this week, tomorrow, and say, hey, I looked at your reviews online, and pause. If they've got some good reviews, they're going to say, yeah, we got a few good reviews. They got some bad reviews, they're going to say, yeah, I know. Just call up a business that's already around you and say, I've seen your reviews. I've got an easy way for you to get more positive reviews and fewer negative reviews and improve your overall customer retention. Would that be worth a 5-minute conversation? And they're going to say yes. And then you just plan to go by there or call them. You can do 10 a night. Send them an email. Now, they're not going to respond as well to emails. But if you live out in the middle of nowhere and there's not a single business in your area, then go online and start sending emails or calling online only businesses. That is going to be your easiest path to making the money you need for the next session to get that $100,000 trading account that I talked about. Because as soon as somebody signs up, boom, $48.50 to you every single month. To me, that is I'm excited about this because it's a brand new opportunity because my buddy invented this app about 3 months ago. So I highly encourage, and at the same time, sure, start the social media account. You can watch me do all of these things, and I can prove the concept for you. But I can't stress enough how dead simple this one is. Where's the split that I showed you? Sorry about that. There we go. I can't stress enough how dead simple this is. Every time somebody signs up, you get one of those. So let me make this clear. If you sign up 10 customers, and I say sign up, it makes it sound like it's some sort of scheme or scam. If you find 10 businesses that need your help, if you find a way to serve 10 local small businesses, which is what this is, it's a local small business service. If you find a way to service and help them, 10 of them, you're getting $485 a month. Now, for some of you, that's not a lot of money. For some of you, it's your car payment. For some of you, it's your mortgage. For some of you, it's all the money you could possibly make in a month. Sign up 10 businesses and you get $485 every single month. Every single month. I'm excited about it. I'm passionate about it. I understand that it sounds too good to be true. I understand that. It only sounds that way because it's new. And as of yet, no one's copied it because it's new. But if you want to trade, carve some time out of your day every single night, or maybe you work nights, so every day, right? Carve half an hour a day out of your time that you're normally going to be sitting in front of your TV with a remote control in one hand and a milkshake in the other. You'd just be sitting there doing nothing. Take half an hour and find one business that you can contact the next day and say, hey, can I help you be a better business, make more money? Because that's what you're trying to do in the long run. And in the process, you are going to earn every single penny that you need. One customer is every penny that you're going to need to get that trading account. We're going to talk about in the very next session. So it is 12:30 my time. I'm going to go ahead and pop up the, do you have any questions, by the way? There was a questions thing here at the end. Does anybody have any questions about this? Oh my goodness. There was supposed to be an email address. Did I put it here? Yeah, there it is. If you want to be an affiliate for us, by the way, you go to godlytrading.com/affiliate. You can sell my book month, make your money. And you can also drop us, you can send us an email from there to ask any questions if you happen to have any questions. If there are no questions about that, and I know you're probably thinking, these aren't these sound good, but these aren't quite what I'm looking for when it comes to earning money on the side to fund my trading account. This is the beginning of a probably a lifelong process. Like I said, I am forever on the hunt for you guys for ways to make money on the side. And as I find them, I'm going to do them to prove that they work and to prove they're not a scam. And once I have proven those two things, I'm going to let you know what they are and let you go and do your thing. Not making money off of the, when I'm not going to be making money off of this for you guys. All right. That makes sense. I'm not making money off of you guys doing this. I'm just doing it as a service to you to prove what they're, because I'll be making money on my own from this. So these four things I showed you today are just the beginning. I think they're a great beginning. They cost no money. All they cost you is a little bit of time. But I'm going to constantly be bringing these new ideas to you as I run across them. I've talked enough for this hour, this session. Next time around, we're going to be talking about that fantastic opportunity for the $100,000 trading account, and how to what all it entails. That one's coming up at 1 o'clock Central, 2 o'clock Eastern. Let me pop up the that, and I will be back in a little bit. All right, we're going to actually go live a little bit early for the next session because I goofed on the last session and did not at all tell you guys how to do the things that you could do. I do apologize for that. I don't know what I was thinking. So, the last session we talked about how to fund your trading account, the one I'm about to show you. You use $43 a month. I mentioned the $48 a month. This other thing. I didn't show you how to take part in it. I apologize for that. So, there it is. Go to businessreviewshield.com. You don't have to worry about typing in the sign up. Businessreviewshield.com is all you need. Businessreviewshield.com, and it takes you right here to the sign up page and just says, give us your, fill out the information, and I'll know that you want to sign up for this thing. The other one was, if you want to sell my book or sell the Godly Trading Pro, go to godlytradingpro.com/affiliate, and it takes you to this page where you can sign up to, if you want to, make $10 every book you sell, that kind of thing. So I apologize for not giving you the actual call to action on the previous seminar. So if you want to take part in those really easy ways to earn the money that we're going to talk about right now, then businessreviewshield.com, sign up there, and godlytrading.com/affiliate, sign up there. All right, so enough about the money aspect of how to make money. Let's dive into the thing that we want to know about, which is, I want money to trade with. How do I find money to trade with? Where can I get money to trade with? And that's where this kind of brand new company, it depends on your version of the word brand new, comes from. So let me show you and pop them up here. So this is Darwin X Zero. And you know what? Let me rearrange my screen so that I can stare at this and stare at you guys at the same time. Am I still doing that? Yes, you guys are seeing me here. No, I'm not. Let me present this window. There we go. Easier that way. All right. I'm just constantly look over here for comments. So you want to trade and you don't have any money to trade. So there's two options. You can trade your own money. You can build up your own money, trade whatever money you have in your account. Right now, I have for those three strategies we talked about, Frank, Forrest, and Bob. I've got a $500 that I put into that account to show you guys my own money's at risk. I believe in these strategies. I'm trading $500. So yeah, if I make 20%, then I'm going to make $100 in a year. That's what I'm shooting for. That's actually what I'm on target for. 21%. Okay, well, big deal. $100. It's not the dollar amount. It's the overall percentage. So you can trade your own money, or you can trade someone else's money. Well, now how do I find someone else to give me money? Well, there's ways to just go knocking on people's doors. Hey, can you give me money to trade with? There's an industry out there called a prop firm, proprietary trading firm industry. And let me just show you, if you're interested in this aspect of it, let me make the screen. You know what? I'm going to use the buttons. Nope, hang on. I'm going to go over here and I'm going to type in the number 2 or 3. There we go. I'm going to leave it like this. Propfirmmatch.com. All right, so a proprietary trading firm is basically, think of it like a hedge fund, a trading company that allows anyone to become their employee, right? They outsource their employees. Hey, you want to be a trader for our company? You don't have to come to move to our city and be in our building. Just trade we'll prove to us you know what you're doing, and we will allocate some of our money to you to trade with, and we'll split the profits. That's what a prop firm is, proprietary trading firm. There's a whole bunch of them out there. This is a great website that just sorts and filters them. I highly recommend it. I make nothing off this recommendation. I just happen to use them. It's a great place to go. If you're outside the U.S., the world is your oyster. You can sign up for any of these. But in general, all right, let's scroll down and look at them. So if you sign up for the Fivers, fantastic company, one of the best. If you want I'm going to read, put your glasses on. If you want a $100,000 account, it'll cost you $470 to jump through their hoops, to go through their program. And at the end of their program, if you have made 10%, then 5%, 15%, then they give you that $100,000 account to trade with, and you don't have $100,000. You have access to $100,000 in an account, and whatever profit you make, the two of you split. And you split it, you get 80%, they get 20%. That's how these things work. But they all require some upfront money. So, leads us back to the other problem. Well, I don't have the money. If I had $400, I'd trade my $400. I don't have $400. What do I do? So there's a new company out there called Darwin X Zero. The actual mothership, Darwin X, has been around for a while. And if you're outside the US, you can use Darwin X. If you're inside the US or anywhere else in the world, inside the US, we can only use Darwin X Zero, which is available to everyone, no matter where you are in the world, but it's the only one that we in the US can use. So it is essentially the same thing. Hey, you're going to give us a small amount of money, and we are going to allow you to trade an account, but their focus is different. What they want is for you to, it says track record. That is the thing they're trying to, you sign up for Darwin X, and your entire focus is on the long-term trading success. They want to develop traders who have a patient, disciplined mindset. They don't want the people making 30% a month. They want the ones that make 2% every single month, year after year after year after year. Those are the ones that kill it. You think, well, 2% doesn't sound like a lot. Well, 2% of $1 million is a lot of money. What they do instead of charging an upfront fee, they charge a monthly subscription. And this is where these last two sessions go together. So for $43 a month, you can sign up for an account. And that's why I said last session, look, guys, you go out there and you sign up one person for Business Review Shield, you get $48 a month, $48.50 a month. And Darwin is going to cost you $43 a month. So sign up one person and you get a free trading account and $5.50 every month on the side. So for what they do here is they say, we're going to give you an account. And the accounts are, where are the accounts? They are $100,000 accounts. Trying to scroll down here. Let's go to get started. Let me just show you here. Click. These are virtual accounts. This is how they get around. Oh, wrong button. This is how they get around the regulations. This is virtual money. And in the two levels that they have, Darwin X Silver and Darwin X Gold. In the silver level, you are trading, essentially you're trading on demo. However, they pay you real money for the profits that you had made. They call it a performance bonus. So they're able to, not circumvent U.S. laws. They're able to, they found a loophole in the law that says that, you know, you're trading virtual money. You're not, this doesn't run afoul of any U.S. regulations. There's differences between a prop firm and this firm. Don't worry about them. Let's just call them a prop firm. Here's a company that's going to give you $100,000 to trade with, and they're going to split the profits. Now you get 15% of the profits. That's a lot lower than some other ones, but 15% of the profit on $100,000 is a whole lot better than $500 account. Believe me. For $43 a month, and that's it. $43 a month, and that's all of it. There's a couple of ways you can make that. By the way, go to my account. I'm going to show you my live account here, and it should pop up here at the top. And it did not. There's an affiliate link that everyone automatically gets. So if I give you this code, you get $10 off your first month, and I get a free month out of it. So if you sign up for this for 1 month, it may be that 1 month is all you ever pay for, because if you sign somebody else up, you get a free month, and sign somebody else up, you get a free month. So there's another way to pay for this. But let me just show you the beauty of Darwin X. What they are trying to do is put you in this program called Darwin X Silver. And the requirement is you have to be in Darwin X Silver for 8 months. And you have to make at least a 20% return. And you have to have a return over drawdown ratio of 2.5. In other words, you have to have made 2.5 times more money than your biggest drawdown. And if you do that, then you bump up to Darwin X Gold. Now, along the way, we're going to be paying you money. You're going to be making money off of what we give you. I'll get that in a minute. But the whole goal of this is to say, hey, we want traders who are in this for the long haul. We're going to force you to wait 8 months, at least 8 months before you get to the next level. What's the next level? What's gold? Gold is where our actual real pile of people with money and investors and our millionaires are sitting. And when you get into gold, that's when those millionaires look at your account and go, oh, I see the track record that you have built. I like what I'm seeing. Let me allocate $1 million of my money to you. And now you're like you are literally like your own hedge fund. So the whole purpose of this is to get to gold. It takes you some time. You earn money along the way. So how does this work? Well, here's my trading account. I started in April, as is usually the case. Byron Golden says that disruption follows intention. My very first month was a negative month. I'm like, oh, really? It's like in my other trading account, I was with the Fivers, and this whole U.S. issue of prop firms came up. I won't get into it today. I had to get booted out of the Fivers from MT5 into something else, and long story. So January, February, March, I was killing it. And then I had to make the switch over here in April. Just lo and behold, it's one of those months where there's a pullback. There's always a pullback. There's always a pullback. Your equity curve is always going to have dips in it. And it just happened to be that I started off with a dip. Now, this is where you need a community of people around you to help you with your mindset. Like, really? I've been great, and now I'm going to try to prove it, and I have a down month. Look at the next month. Made it all back the next month. And it's been pretty consistent. Now, October, had a slightly negative month. Made it back in November, December. So what they do is they have this criteria out there. You have a rating, and you need a guaranteed rating of 75. What does that mean? Don't worry about it. Just know that as you are trading, and as you're trading well, this number goes up. And if this number hits 75 or ends the month at 75, they are going to allocate you some money. Anywhere from $30,000 minimum to 375, okay, it's euros, not dollars. 375 euros. That's money that they put, it's virtual money, but they basically put that into your account to trade with. You can't withdraw $375,000. But now suddenly, whereas you had $100,000, now you've got $375,000. And it's that allocation that you make the money off of. Everybody who signs up gets $100,000 of virtual money to trade with. Once you prove to them you know what you're doing, then they assign you, let's call it a next level of allocation. Let me give you a real world example because I might be losing some of you. Let's go to my account, my Darwin. So I currently have 90,000 euros under management. So back in August, all right, I had been doing well. So I was -4, and then up, and then 5, so I'm up 1, then up 1.4, and then right here in this is July, so June, July, and August. So in August I made 2%. I finally passed over the 75 mark, and they said, okay, you have jumped through the hoop. You've proved what you know what you're doing. We're going to allocate you $30,000. Now every allocation you get lasts for 3 months. At the end of 3 months, whatever allocation they gave you for that month rolls away, goes off, and you got to start over. But you get them every single month. So you can keep 3 of them at one time. So I made 30,000 this month, and 30,000 this month, and 30,000 this month. So that's 90,000. And I have kept that every month for, where's my allocation? I started here October, November, December. So I've gotten allocated 1, 2, 3, 4, 5, 6 months in a row. I still need a little bit of time to get to overcome this first month, get to gold. But where is the number? Here it is. So I have been allocated $180,000 total. Now again, they only last for 3 months. So I'll get 30, and then 60, and then 90, and then the next month, I'm being emphatic, I need to use my hands here, 30, 60, 90, and the next month I get another 30, but the first 30 has rolled off. Now, a big difference between silver and gold is that it's 6 months, not 3. Same thing happens here. While you're waiting on a real investor, you're still getting this money. And so then we go over here to payments and earnings, and you see how much money have I made, because you're making the 50% off of your earnings. So allocations, earnings, one of these two. Oh, here's the code if anybody wants it. Here we go. So I have made in profit a total of $4,400 off of that 90,000. So that's what let's say it's 3.74%. Should be more than that. And so I'm expecting they pay once a quarter. I'm expecting in February the 3rd, I'm expecting a check from them for $504. Well, that's not a lot. Well, my goal here is to lay down a track record of 1 to 2% consistently every single month with very little negative and not a lot of spikes. So that when time comes to make it up into gold, these millionaires with money that are looking for people to manage their money for them can look at my track record and go, oh, I see this guy. He's making 2%, 1%, 2%, 1%. Okay, 4%, minus 4%. Okay, positive 5%, right? He's going to look at this and go, wow, negative month, made it all back. Positive, 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 negative month, made it all back. Positive, positive. And so I want this guy to manage my money. And then he gives me $500,000, $250,000, $1 billion. And now I've got real money to go along with the virtual money to trade with. I can't recommend this company. They are doing something that is disrupting the entire industry. Number one, they're charging a subscription cost up front. They're giving you a way to earn that for free by the affiliate. You sign somebody else up. Every single person who gets an account gets a code, and you give us that code to somebody else. I'm gonna give it to you, right? If you want it, you can have it. It gives you $10 off. So your first month's only $30, and I get a free month out of that. And then, even though this is virtual money, they're still paying you on the profits on virtual money, which is amazing. And all of that is to weed out the fly-by-night. I want to make 30%, 50%, give me a flashy car. Because, guys, those types of returns don't last. The best investor in the world, Warren Buffett, his lifetime annual return is 19.8%. Right? It's like 1.5% a month. That's all they're looking for. And so what this program does, why do I love this so much? The other prop firms, they feed into the worst elements of bad trading mentality, bad trading mindset. It's get as much as you can. We're going to give you 80%, we're going to give you 100% of your profits. Just give us this money and go out there and kill it. Make as money as fast as you can. This company says, whoa, slow down. We don't want those kind of traders. We want traders who trade the right way. We're going to talk about this in the next and last session. What is the right way to trade? The best way to be a long-term successful trader is slow, steady, boring trades. Where every day you open your trading platform, you trade for 10 minutes, you close it down, you move on through life, and you're making 2% a month. That is what we should all strive for. And what they have done is create a framework that forces people to either accept that trading mindset or flame out and go somewhere else, get fed up and go somewhere else. Oh, I can't make 15%. I can't live off 15%. That's what hedge funds make. BlackRock, millions of dollars a year off 15% profit share. They are forcing people to look at trading the appropriate way. And I just love that. I love that by very definition of this. If you're going to succeed here, they're going to have to change the way you think. We all think. And it is the way forward. It is the way to be a successful trader, is to look at this from a patient, long-term perspective. Guys, I don't know how old any of you are. If you don't have any comments. I don't know how old any of you are. Make this thing bigger. But even if you're like me and you're 50, I could be trading for the next 30 years of my life. If you're 20, you could be trading the next 80 years of your life. Be willing to take it slow. Be willing to be the tortoise, not the hare. Win this race by slow, steady, predictable, reliable returns. That is what they are after. And they have created a system that forces people to do that. So I think it was like, I don't know, $170 for the last payout, my first payout ever. And I'm just leaving the money in there and it's paying for the monthly fee. And then I'll leave the next one that'll pay for the monthly fee. Because my goal here is to pass that. I've already passed the 8-month mark. Can't get to gold yet because of this first month drawdown. I've got to hit. Let's take a look at my account. Where is it at? Something says gold here. Here it is. Stats to participate in gold. I need to hit 20%, which I'm at 13.8, and I need to have a 2.5 return over drawdown. Currently, I'm at 1.6. Now, I've done the math there. My max drawdown is 8, so I need to hit 21%. And if I hit 21%, I'll bump up to gold. I still have this same procedure. I still can get allocated virtual funds. I can still get a performance bonus. But now, anybody out there who wants to invest in me can. And now I'm trading real money. I am now suddenly Godly Trading Hedge Fund Incorporated, and I'm trading someone else's money, and I'm splitting those returns. Now I'm making 15% off of $1 million account or a $500,000 account, not a $90,000 account. So this is just go to DarwinX 0. I'll put a code. If I can favorite it is. Here's my code. Now, with this, you get a 1 month of credit, and your friend gets 25% discount. So you get 10, whatever 25% of $43 is, $11 thereabouts. You get $11 off your first month, and I get a free month. And then you can turn around and do the same thing, and you get a free month. We put this in the chat. If wants to use this, you get a discount. I get a discount. I'm excited about these, and whenever I get excited, I get animated and passionate. And yeah, I can't recommend people because there's laws against that. But guys, check them out for yourself. Go to DarwinX0.com. These last 2 sessions have been, I don't have money to trade with. How do I overcome that? This company for $43 a month will open the door to your financial future in ways you can't imagine. They're going to force you to be a better trader. They're going to pay you along the way. And they're going to open the door at the end for you managing some millionaire's money and making money that way. And they're going to ask for $43 a month for that privilege. And if you watch that last session, I've got several ways for you to make that $43 a month with 1 phone call a month. Actually, 1 phone call, period. You sign 1 person up for Business Review Shield, and this account is free. This account's paid for. And you never have to pay for anything else ever again. And then the money just rolls in. The other brilliant thing about them, unlike prop firms that have their own rules, DarwinX says trade however you want. We don't care. We're going to tell you what we're looking for. We want people with consistent returns in the 2 to 3% range. But do whatever you want. So there's no maximum drawdown. Every other prop firm says if you hit 10% drawdown, if you have 5% drawdown, if you haven't traded in 30 days, any of that, you lose the account. The money that we paid is gone. DarwinX says there's no rules, there's no hoops to jump through. Get to this 20% level of return and we're good. Trade however you want. So if you're a day trader, if you're a swing trader, if you're trade the NASDAQ, if you trade stocks or Forex or whatever it is, they trade every market out there. That is also a little bit new. It started off with just Forex, but now it's Forex, and US stocks, and US indices, and commodities. Worldwide indices. You can trade the FTSE, which is the London 100. I think it's the London 100. The Japanese 225, right? Their versions of the S&P. They have a worldwide list of things, markets you can trade. So I'm so excited about DarwinX. I'm all in on DarwinX. This is where your financial future in trading will come from. Yes, it's going to cost you $43 a month. I've shown you how you can pay for that. 1 customer on Business Review Shield, and this account is free. And then it's just a simple, I say simple. It is simple. It is simply proving that you can be a good, successful trader. Trading is not easy, but trading is very simple. And then is, hey, come to the free Facebook group. Talk to us. Let us help you become a successful trader. If you need extra, I've got courses and coaching and all of that, but you don't have to spend any money here. I've shown you the path to get to here. And once you're here, anything is possible. That's what I love about trading. I love about trading is that anything is possible. You are in control, for good or for bad, you are in control of how much money you make and at what rate. Now, okay, let's just take a quick look at people who have made the most. So this past month, December ranking, right? So this past month, this guy got allocated $375,000. Right? I got allocated 30. He got allocated 375. Let's see. He made 13% in December, and his maximum drawdown is 3. That's fantastic results. Let's look at his historical position. Well, this is his first month. He's brand new. These big high flyers, they don't last. They come in, they get the first spot, and they fall away. This guy, let's go to number 2. He made 15% last month. He's had his total allocation. So he had something in December, something in January, and then it goes 265, 220, then it drops off. You can see oh, this is how much everyone's getting allocated. So I think it's like 700 people out of 7. So 10% of the people that sign up for it get allocated money every month. Look, we're down here. Let's keep going. Well, I don't want to. It's slowing down here. 50 and 45. Let's just find the number. It's gonna be very boring content for those of you who are watching the replay. By the way, the replay of this will be available on YouTube forever. So it's a 6-hour replay. I'm not going to chop this one up. I'm going to chop up the individual lessons and put on the website. That's members only content. But if you want to watch this whole live stream, it's available for you as long as YouTube keeps itself alive. All right, I'm trying to find the end of the 30,000. Oh gosh, it's going to be forever because we're still in 81. It's going to be 75 to stop. So anyway, at least 500 people got allocated. I don't want to say I recommend everyone go out here and buy it. I can't do that. I'm not allowed to say that. If I could, I would, but I can't. Everyone out there should go to darwinx0.com and read it for yourself. Decide for yourself if this is what you want. As I mentioned before, you can trade anything. You got Forex and commodities, indices, right? There's the Australian, there's the NASDAQ, there's the Japanese, there's the American, there's the UK, commodities, gold, silver, stocks, ETFs. You can trade anything you want to trade. And it's, on the one hand, it's demo money, because when you lose money, you're not losing actual money. It's virtual funds, but you're still getting paid on the profits that you make. It is somehow the best of both worlds without the negative of either. The downside to demo is I don't feel invested because it's not real money. When I tell people, hey, I want you to be on demo for 6 months, this can absolutely be your demo account. Because what happens if you knock it out of the park from the get-go? Well, now you've got a tracker. What they're doing, by the way, I should have said this. I tried to say this a while ago, but I got distracted. What they are doing is they are getting you to build a verifiable track record of returns so that they can show people. So that you can show people, hey, you want to see my returns? Let me show you my returns. Verifiable returns that are held by a third party. Yep, this is it. All right. This is my personal DarwinX account. So double this number because I'm going in at 0.5%. DarwinX doubles it. The whole big story. Don't worry about that detail. If I was trading my own account, this would be 1% per trade instead of 0.5% per trade. So double this number. So since April the 3rd, I have made 15.84%, which is for 9 months. I think it works out to about 21% a year. I'm just over the moon about that. These are my actual results. Now, if somebody out there, some millionaire knocks on my door and says, hey, I got $1 million and I want to give to you to trade my money and we'll split the profits, but only if you can show me verifiable evidence that you know what you're doing. Well, I'll come here and say, okay, here you go. Look at this. Third party, 8 months of real trading returns in a real trading environment. And that's what they do. They help you build that tracker. That is the whole point of what they're doing. So I keep beating the same horse. Certify your track record without putting your capital at risk. That's the best way to put it. So I strongly recommend everyone investigate DarwinX. If you need $43 a month, reach out to us. Go sign up at businessreviewshield.com and you can earn with one phone call this account and never have to pay for it ever again. And then you're on your way, like me, right? I make money elsewhere, but I make money here as well. And you're on your way to developing, building, creating a track record that somebody, as soon as I make it to gold, somebody's gonna look at my results and go, "Oh yeah, here's my money. Please go trade my money." That's what we're looking for. If you don't have money to trade on your own, the answer, trade someone else's money. And Darwin X, I think, offers an amazing opportunity to do that. So that's it for this session. Does anyone have any questions about anything that I've covered here today? Let me get back to here and have any questions about this? Our last session of the day, which is honestly, it's our most important session of the day, is how to create your trade plan. And this one is so important because this takes a step back and says, where are we now? What's our goal? What are we trying to achieve? And how do we get there? It's not exactly what you think when it comes to this trade plan. But I really recommend anybody come to this session here. And if you have any questions along the way from any of the other sessions, I'll be happy to answer them at the end of that trade plan session. Any questions from the rest of the day? Let me put this back over here. We're about to do a thing. And let me stop sharing that. All right, that's it for now. I'm going to be back in a half an hour for our last live stream of the day. Thank you guys for being here. All right, I'm back. It is time to finish this day-long live stream up, and we're going to finish it appropriately with the most important lesson of the day. We have been through quite the journey today so far. We did how to trade options, how to trade stocks, how to trade Forex. We spent about 2 sessions on funding your trading account. There's some amazing opportunities for you there. And then lastly, we get around to how to create a trade plan. And if I can successfully share this screen here, there we go. How to create, nope, that's not what I wanted. I mean, it is kind of what I wanted, but let me go to this and that and sharing just that. And fantastic, we are back. How to create a trade plan. And which automatically begs the question, why do I need a trade plan? What is a trade plan? Before we get started, there's a disclaimer. Everybody can read it at your leisure. By the way, this live stream will live on YouTube in perpetuity. I'm going to chop it up and put the individual sessions as lesson 1 modules on the overall courses on the Godly Trading course site. But if you want to watch anything of that we've gone over today, the entire 6-hour live stream is going to be available on YouTube, and I guess Facebook as well. So why have a trade plan? I mean, why not just go from your gut? Why not just trade what you see? There are lots and lots of people out there who they trade what they call naked charts. They just trade price action. Well, how are you going to know if you're successful or not? How are you going to know if what's happening is just anybody can do it, if it's just luck, or if it's your strategy? How do you even know your strategy is going to work at all? I mean, back in the heyday of like 2000s, when the .com bubble had not yet popped, anybody could buy anything and it's going to go up. You didn't need any sort of plan. Everything worked. But the trade plan is what helps you define success and what helps you know if you got to have a plan. If you fail to plan, then you're planning to fail. We've heard that over and over again. I love this quote. Begin with the end in mind. What does that mean? When we're thinking about where we want to go, let's start at our goal of being a successful trader and having being a certain type of trader and having a certain type of trade plan. Start with the end in mind and work your way backwards. And that's what we're going to do today. Stephen Covey said this. Before Stephen Covey said it, Solomon said it. It said, the plans of the diligent lead surely to plenty, but those of everyone who is hasty surely to poverty. If you go into the markets hastily, without a plan, it will lead to poverty. I guarantee you. Paul said this, brethren, I do not count myself as apprehended, as having caught. But one thing I do, forgetting those things which are behind and reaching forward to those things which are ahead, I press toward the goal for the prize of the upward call of God in Christ Jesus. Paul is saying, I'm not going to worry about what's behind me. I'm going to keep my eyes focused ahead, implementing the plan that God gave you. That's what a trade plan does for you. It tells you, hey, yeah, you had a loss. Big deal, you had a loss. Your trade plan said you're going to. It's one of the things I love about having a trade plan. You can tell I'm getting excited again. One of the things I love about having a trade plan and having back testing. Like, I know that my strategy is a 60% win strategy. I know that I'm going to lose 40% of the time. But in my back testing, I can already predict how many losses in a row I'm going to have. So if I go, oh my goodness, I just had 3 losses in a row. I look at my trade plan. Oh, hang on. My back testing predicted I'd have a maximum of 6 in a row. So I'm not there yet. It helps you navigate all of that nonsense that goes on in your head. I love it. So we start with the question. Do you want to be a successful trader? Well, of course, everyone wants to be a successful trader. You say, Pepper, it's a pretty dumb question. The answer is always going to be yes. Who's going to say no to that? Right? But I need you to think about something. Do you want to be a successful trader? Yes. Before you can know what this word means, you have to know what the words mean. You have to define those 2 terms first. This, again, much like learning how to trade stocks, how to trade options, how to trade Forex, this is part 1. This is lesson 1 in a long-term course on developing your trade plan. We start at the beginning. with the end in mind, but we're going to start at the beginning. Define what it means to be a successful trader. Why would we do that? You don't know where you're going. How will you know when you got there? I said earlier, I think I already liked it on Facebook. I said earlier, at some point, you're going to become a successful trader in your head before the rest of the world recognizes that you're a successful trader in the market. For that to happen, you must have a goalpost in your head. And as soon as you get there, that's when you know that you are successful. You have to define it for yourself first and only. Don't let someone else tell you what it means to be successful. Oh, you're only making $100 a year. You're not successful. Well, if that $100 represents 50% and you've done it every year, you are successful. But you have to know what those two words mean before you can be identified by them. Believe it in your head, believe it in your heart first that you are a successful trader. So we're going to break it down. What does being a trader mean to you? And I've got like handouts that I don't know how to hand out on a live stream. And they're actually things that I want you to write down. I want you in your mind, maybe say out loud to the camera there. I define a trader with these things. A trader is a trader does, and then what does a trader have? I know a trader is a day trader. A trader is someone who buys and sells stocks. A trader is fill in the blank. What does this mean to you? Because you want to be defined by this term. At some point between now and the next minute and the next 20 years, you are going to call yourself a successful trader. You have to know what that definition means for you. So, the first thing we're going to talk about is in defining yourself as a trader is time frame. The first step in building your trade plan is time frame. Solomon again, to everything there is a season and a time for every purpose under heaven. This is so applicable to trading. There is a time for your purpose in trading, whether that's trading the tick chart all the way up to the monthly chart. The time frame that you're trading, only you can decide that. Here's what they are. And just let me do this. Nope, I'm in the way. Let me do that. Nah, let's go back to that. You've got scalping, day trading, swing trading, and position trading. On one of those. Scalping is in, out, in, out, in, out, in, out. That's scalping. Scalping is many trades, making very small margins. You're in, you're out, and you move on. You are trying to Walmart your way to it. You're trying to make small percentages in bulk. All right, that's the Walmart way of trading. Scalping requires incredible discipline, incredible reflexes, and incredible planning ahead of time because there's no time to think in the middle of it. Scalping is the hardest one to achieve. Scalping is also the hardest one to get a trading robot to achieve. That's a whole separate course on trading algorithms. I will do that course. I've got trading algorithms that I use myself. Day trading. Day trading is defined by the U.S. government as opening and closing a trade within the same trading day. That's all the day trading means according to the government. That's generally the sign. Scalpers hold a trade for seconds to a couple of minutes, maybe. Day traders hold a trade from a couple of minutes to a couple of hours. That's the difference between those two. These are all just different versions of the same thing. Swing trading. The only difference between scalping and day trading and swing trading is that swing traders hold their trades anywhere from a couple of days to a couple of weeks. And position trading is you hold your trades from a couple of weeks to a couple of months. It's fractal is the word there. The same set of circumstances, the same procedure, the same everything, just on a bigger and bigger and bigger scale. A scalper is going to be doing the 1 minute chart, the 5 minute chart. A day trader is going to be doing the 5 minute chart, the 30 minute chart, 15 minute chart. The swing trader is going to be doing the 4 hour chart, the daily chart. Position trader is going to be using the weekly chart, maybe the monthly chart. It's the same thing, but you have to decide which of these you want to do. And that comes after some hard introspection. So trading plan, critical question number one. When can you trade? And I mean this, when can you realistically trade? I know you might want to be one of these, but can you realistically be one of these? I, for a very long time, wanted to be a day trader, but I had a full-time job. 9 to 5. Could not day trade. I tried to force it. I'm out in my work truck with my laptop open next to me, making trades at 60 miles an hour down the road. That's a terrible thing. No one should ever do that. I was not realistic in my expectations of what kind of trader I could be. So the first thing you have to do is, when can you trade? Take a hard look at that. Remember, how you do anything is how you do everything. If you're going to be, you have to fit your trading into your lifestyle and never the other way around. If you say to yourself, I'm going to pick day trading and just find the time to do it. If you're inconsistent in your daily life, you're going to be inconsistent in your trading life. So I had this, I have to embiggen this. I had this, there we go. I had this checklist, this questionnaire, these series of questions, and you have to take a hard, honest look at your life first and foremost. Can I be at my computer all day, every day? Yes or no? Can I devote my full attention to my computer during that time? If the answer to either one of these is no, you cannot scalp. I'm sorry, you can't scalp. If you can't be in front of your computer for the entire time that you need to trade and devote your attention your entire time to your computer, so maybe I'm a stay-at-home mom and I got 3 kids. Well, you're not going to be able to devote 4 hours of nonstop staring at a screen if you're a stay-at-home mom with 3 kids that are under the age of 5. Scalping's out. Can I be at my computer part of each day, every day? Yes or no? If yes, then day trading is open to you. Can I devote my full attention to my computer during that time, whatever time it is? Let's say that I have a 2-hour window at some point during the day, every single day. Remember, how you do anything is how you do everything. Consistency in life bleeds over to be consistent in trading. So I want to trade the exact same way at the exact same time every single day that I trade. Can I, if I've got 2 hours a day that I can devote to this, can I focus myself on those 2 hours for my computer? If so, then yes, day trading is open for me. Now, scalping might be out, but day trading is open for me. What if I can be at my computer part of each day, but I can't devote full attention because I never know what might happen. Let's say I work a job, or I'm a security guard in a guard booth, and I got my laptop with me, and I'm there for 5 hours a day, and I got my laptop, but there's stretches where I'm distracted for 15 minutes at a time. Well, day trading is out, but swing trading is open. So, question number 5. When can I trade? What are the hours of the day that I can devote to just trading? And how long can I trade? I can trade every day when I get off of work, and I can trade for an hour. I can realistically, now don't take time away from your family that is critical. You have to tailor your trading to your family life, to your daily lifestyle. Never try to go the other way around. Never try to force your trading into your family lifestyle. Set aside a time, whether that is a 8-hour block or a 5-hour block or a 2-hour block or a 15-minute block or whatever it is. When can I trade during that day? If you can't do any of that, you can go to the next question. Can I be at my computer at any point during the week? Yes or no? So, okay, well, sure, I can be at my computer Monday nights. I got a friend, does all of his swing trading for the week, 30 minutes on a Monday night. But it's the same 30 minutes every Monday night. And he can devote his entire attention to his computer during those 30 minutes every Monday night. That he can absolutely, and you can absolutely swing trade. And then so you go through your life. You go through all of these questions. Can I do it? When can I do it? How can I do it? What kind of focus can I have during that time? And if after a thoroughly honest, brutally, I'm going to be emphatic here, brutally honest assessment of yourself, maybe get someone else to help you, maybe get your spouse to help you, come up with, is there a time during the trading week when you can sit down in front of your computer for any period of time, the exact same period of time every single day, and devote your full attention to your computer for a certain period of time during that? All right. Every night at 5 o'clock, I can sit down at my computer for 30 minutes. Fantastic. You can be a day trader of the agent session on Forex. You can be a swing trader, absolutely. If you get to this question and you can't find a consistent day, it's going to be tough. But all of us, all of us have 30 minutes a week we can devote. You can be a position trader. If nothing else, you can be a position trader. If you devote 30 minutes a week to this, be a swing trader. So defining success starts with that. And this is the first question. When? Be a successful trader, I have to know when I can trade. Next step is now that we have time frame nailed down, market comes into play. There are all manner of different trading markets, and they have some bleed over into the when. All right, so if you're stocks and you want to be a day trader, you can't be trading at 6 o'clock in the evening. The stocks are closed. If you want to be a day trader and your only time where you can be in front of your computer for 3 hours is from midnight to 2 a.m., hey, fantastic. You can day trade the London session of Forex. Fantastic. So this is going to go into that a little bit. So answering the first question will help you answer this question. Also, what can you trade based off of the elements that we talked about? I think it was last session. What resources do you have? What kind of capital do you have? You know, some of these markets, if you're trading just purely stocks, that is capital intensive. That means it requires a lot of money. What was it? Apple closed at 250 somewhere in that neighborhood per share. Now, sure, on Robinhood you can do fractional shares, but these different markets require different levels of capital. So, critical question number 2: what can you trade? The good news is it doesn't matter which one of these you pick, by and large, because trading is trading. Trend trading, the Frank strategy on Forex or stocks, or using an option strategy on stocks or futures, it's all the same. The chart is a chart. Price is price. There's some minor differences here and there, but trading, the information, the knowledge, the wisdom, the skill, the discipline, above and beyond, the discipline that you develop in any market will be the same discipline you need for the other market. So trading is trading. And so get that out of your head that, hey, I want to be identified as a U.S. stock day trader, but I can't be at my computer at all during the U.S. market open time. There's nothing wrong with trading futures or trading monthly options or trading Forex at night. I would rather you be identified as a successful trader than you be identified as a day trader or a swing trader or a stock trader or a futures trader. Wrap your brain around the fact that the end goal here is to put my family on a path towards financial freedom. That's what's important, not the way that, not the particular market that I'm trading. Be flexible, but start from a place of honesty. When can I trade? How does that answer open or shut doors for what can I trade? And then, okay, I can trade anything. Fantastic, because I'm at my computer all day long. I'm unemployed. I'm sitting at home. I got nothing to do but look at the computer. I can trade anything. Okay, fantastic. How much money do you have? You don't have any money? You can't trade stocks. Those are the kind of questions that lead to your trade plan assembly. When you get these questions answered, first thing is deciding when you're going to trade. Then you're going to decide what you're going to trade. And those two questions help one another. And then you're going to decide how you're going to trade. What does that mean? How am I going to trade? Well, as we mentioned, the great philosopher, the French philosopher Gusteau said, anyone can cook. Any strategy can work, which is not to say that every strategy will work, but any strategy can work. And your success principle number 3 here, back testing is the key. Guys, if you go to YouTube and type in trading strategy, you're going to find, well, I wonder how many videos. I'm just going to do this real quick. I hope you guys can still see me. I'm going to go to youtube.com. I'm going to type in trading strategy. You can't see me doing this. And I've got an entire page of videos. Oh my goodness, at the videos. There's every strategy in the world out there. I encourage you to explore as many of them as you want, but back test all of them. That is how you're going to know if it works or not. The specifics of the trade plan, we went through them in the how to trade stocks and how to trade Forex. We went through the three called the trend trading friends, right? Frank, Forrest, and Bob. Ways to trend trade, which is what I do. That's a strategy that I found. There's three different strategies there. I found them separately over the course of different time periods. I back tested them. I realized that they work. They kind of work together. I tested them thoroughly. And then I put them to work. But at the same time, I'm not just focused in on these three. I'm never going to do anything else. I don't want to say I'm constantly on the lookout for other strategies, because that implies that I'm never satisfied. Here's a good analogy. It's a biblical one too, which makes it even better. When God tells you to do a thing, and you go off and you do that thing, and you're being obedient, make sure that you still listen to what God has to tell you, even when you're doing what he told you to do. Case in point, Abraham. God gives him a son, Isaac. God tells Abraham, hey, go up on this mountain and sacrifice your son. And he goes to do that. Top of the mountain, he's got the knife's in his hand, hands in the air. God says, blow up now. And Abraham stops. Imagine if Abraham had not been listening. Right? He's focused on doing what God told him to do. Absolutely being obedient, doing exactly what he's supposed to be doing. But he's got his antenna up. Make sure that he is constantly listening to what God is saying. You have found a strategy that works, and you are focused on that strategy. And you're not going to lose focus by trying to chase rabbits and find a different strategy. But your antenna are open. Your mind is open. Your willingness is open to hear what other people have to say. I did not go looking for Frank. I was watching a video. It popped up. I'm like, that is so dead simple. I wonder if that would really work. And I tested it out, and oh my goodness, it's dead simple. So don't always be on the lookout, but always be willing to listen and explore other strategies. And you may find in 10 years you're trading a completely different one than you're trading right now. Find it. However, you buy it, create it on your own. I created my strategy on my own. And I have a couple other strategies that I have found other people. You're saying, well, you copied someone else's strategy. There's no such thing as copying a strategy. It's all just numbers on a page. No one has a copyright on trading strategies. Find it, test it thoroughly. Write down everything about it. Write down the specifics of a trade plan. It's more than just I'm going to enter here and exit here. It's how am I operating my day? Sit down and write down. I'm gonna get up and I'm gonna exercise. That's part of your trade plan. Absolutely. I'm gonna pray. Read my Bible. That's part of your trade plan. Absolutely. I'm going to sit down at my computer this time every day, and I'm gonna turn on my computer and I'm gonna open up this thing in the background and listen to this video and watch and read that newsletter, and then I'm gonna open up all of these things. Write everything down. Make your trade plan 500 pages, and then reduce it. Start taking things out. The ideal trade plan is one that you can give to somebody else that knows nothing about trading, and they can be just as successful as you are. Here's mine. I'm gonna have to make this a lot bigger. This is my trade plan for, make it even bigger than that. I can't even see it with my glasses on. Put my glasses on, see what helps. Okay, I can see that. So the first thing I do is I got these verses at the top, and I make sure I read those verses every day. Therefore, whether you eat or drink or whatever you do, do all for the glory of God. I'm remembering that my trading is I'm here for His glory. Be anxious for nothing. Boy, in trading, isn't that what we need? Be anxious for nothing, but in everything by prayer and supplication with thanksgivings, let your requests be known to God, and may the peace of God, which surpasses all understanding, guard your mind in Christ Jesus. So I had these things that were part of my large-scale plan, and I reduced it down, but I kept them there. So every day I remind myself, keep trading in perspective. Be thankful. Do what I am doing for God's glory and to help my family. And then it's like, okay, open my platform, and then check the news, check my open trades, record anything that happened overnight while my platform was closed, look for new trades. So all of these steps at the end, send my trades, update my trade journal, write in my other journal, which, one journal is for the actual trades, one journal is for your mindset. What did I think? How was I feeling that day? Close the platform, and the last one's the most important. Walk away. When you're done trading, walk away. So this is my trade plan. And this started as a giant volume, and it has been reduced down. And you want this one-page trade plan, but it took quite some time to do this. Which is why this session is, how to build a trade plan is probably our most important course. And it's, I don't know, it's going to end up being 8, 10 lessons. Again, I'm going to be delivering them free live for anybody who wants to watch any of these. But you can't just sit down and say, okay, I'm going to be a trend trader using a moving average crossover. So I'm going to write down when the 20 crosses the 30, end of the trade. No. Step one, to answer the question, do I want to be a successful trader? Do I want to be identified by that phrase? And if so, what does that phrase mean to me? What does it mean to be successful? What does it mean to be a trader? Take a brutally hard look at your own life and say, time. Trading takes time. When can I sacrifice time? That's not going to, that I'm not giving up, okay, maybe it's, I don't want to take time away from my family, so I've got to do this when everybody's gone to bed. I'm going to sacrifice half an hour of sleep a day by doing this first thing in the morning. I get up first thing in the morning and do this. Or you've got to take a hard look. Don't start with the end goal of I want to be a blank trader, unless I want to be a successful trader. Don't paint yourself into a box in the beginning. When I first started, guys, I just knew I was going to be a day trader of stocks. I'm not a day trader and I don't trade stocks. I trade options on stocks, but that was almost an identity that I built for myself. And it was hard to let it go. I have to be honest, it was very hard. There was a lot of pride involved in that. And it was hard to let that go. So that's my task to you guys is if you're just getting started, or if you have been trading for a while and it's not going well, take a step back and take a hard look at your life, your lifestyle, when you can trade, how that affects what you can trade, how much money do you have to trade, all of those things. And build your trading life, build your trading career on a firm foundation that is built in reality. Oh, that's a lot to go over in a day. It's been 6 hours of live streaming. It's been quite the enjoyable ride. Thank you guys for being here this entire time. Like I said, it's going to live on YouTube, so you can find this. It's 5 hours and 28 minutes, and let's limit it to 5.5 hours exactly. So if you have any questions whatsoever, let me show you where you can go to reach out to the best thing you can ever do is go to godlytrading.com, sign up for our free newsletter. Once you're there, you can communicate with me, pepper@godlytrading.com. There's a link in the email that you get when you join the newsletter. Please join the Facebook group. It's free. Anyone can sign up. That's where we talk amongst ourselves. We help one another. We're there to support one another. It's a community of traders. And it just, that is the hardest thing to find is a good community. So I would highly recommend everybody out there sign up for the newsletter at godlytrading.com and then join the community. And there's links in both of those. The welcome email you get from signing up for the newsletter has a link for the Facebook group. So that is it for me, guys. It has been an interesting day. I thank you for those of you who stuck with me through the whole day. If you have any questions, send them to me. You can reach me on Facebook. You can reach me on Instagram, on YouTube. You can email me, pepper@godlytrading.com. With that, guys, my voice is just about shot. It's been a blessing to be with you here today. I'm going to go ahead and get out of here, and I will see you all, probably not tomorrow. I will see you all sometime this weekend.